people out there, because you naturally will leave. I hope you know that. Okay. Thank you very much. And then students, mentors, and faculty must all abide by the CFA Code of Ethics. What defines us as CFA is our ethical standards. I mean, it distinguishes us. As I stand here, if I violate it, my CFA, I can't even put it by my name. After all the years I struggled to get it. Okay. So now let me tell you what you get when you are done with all that by applying the rules. So in your work, okay, I think, okay, good. So this is the part I love. Here you see how you be graded. Okay, I hope you can see the numbers. So the financial analysis gives us 20, valuation gives us 20, environmental, social and governance gives us 20. This looks like a CFA resource slip. Yes, it tells you where things have been, okay? So at least from here you can tell when you are being graded. Okay, so please give me the next slide. Okay, so this is the group that we would be studying. MTN group, and I'm sure you already know MTN group, okay. So let me see, what are you to tell us? No, I won't say anything much about it, but you have to tell us something about MTN group. I want to tell you what you will get when you are done. Good. So from here, when you are successful as the winner, you will go and compete in the sub-region. Our big boys, Nigeria, is always worrying us. But we've beaten them before. We hope we can beat them. Then from the sub-region, you go to EMEA. You know EMEA, Europe. And then when you win, you go to global. Okay? So it's not just Ghana. And we hope that you go global. So what else am I to tell you? So the final is in May. Last year it was during the members conference, right, in Chicago. Yes, that's where they had it. Okay. Now what else? Okay, good. So when you are first, you have a trip to Egypt for the May 2026 Regional Societies Research Challenge. So you move from here, you will go there. So, but please know that there are terms and conditions. When you are moving people out of town, we don't control the variables. And then you have internship slots. You have award for each member, research support, branded souvenir, and certificate of participation. Okay. Oh, the others will also get something. It is all available. Okay. The joy I have is that participating in this even gives you the confidence that you can take up this profession. And then who knows, you can join the fraternity as an intern, okay? So I think I have taken too much of the time allotted to me, but thank you and all the best.
Thank you, Marwan. Before I introduce the participating teams, I would want us to meet our faculty that supported the teams through the journey. First on our list here is Dr. Benjamin Amwa. If Dr. Ben is not available, okay. Dr. Godfred Awa. Is Dr. Okay. We have Dr. Philomena Aqua. Welcome. We have Dr. Anthony S.L. Anderson. It's like Dr. Anthony has fans. Dr. Joseph Oscar Akote. Is he here? Okay. We have Dr. Karekare Nana Kwesi. Dr. Karekare is my new friend. Dr. Peterson Owusu Jr. Now we'll meet our team of analysts. The first thing we have here is 360 Insights. If 360 Insights, let's see you on your feet. You're all looking like you're actually going to pitch a stock. Please have your seat. We have Alpha Capital, if they are here, Alpha Capital. Clear Path Advisory. Clear Path. Some of the names I would want to know the meaning behind these names later. Sigma Capital Partners. Team Apex. Team Atlas. Let me pronounce it as a Ghanaian. Atlas. Team Mentalix. These are Gen Zs are doing a lot with these names. All right, so these are our teams. So the rules is that the first team that will be presenting will be ClearPath Advisory. So before they start their presentation, all the other teams will move to the breakout room. Whilst the teams are moving to the breakout room, we would have a word from our sponsors. So please, if you are a part of ClearPath Advisory, kindly remain seated. If you are not a part of them, please we would usher you to the breakout room. Whilst we have our sponsors.
Dear future me, I hope you are living the life you dreamed of. Finally, running the business you've always wanted. Waking up each day with purpose and enjoying the freedom you worked hard for. I hope that your efforts over the years led to a life well earned. But dreams do not happen without action.
Your future self is counting on you. Fulfill your promise of a better tomorrow. Start saving with Access Pension Trust to achieve financial peace of mind. Visit www.accesspension.com/futureme to learn more. Access Pension Trust, your reliable partner in pensions.
All right, if ClearPath is here, let's put our hands together and welcome them as we start our competition. ClearPath Advisory.
Who would have thought that a country birthed forth from an apartheid will rise as the leading force in the telecommunication industry in Africa within 3 decades? Journeying from Investicom, Ariba, Spacecell, this country or this company has made a firm for itself. This just didn't happen. By strategic financial investment, good governance, value for customer experience, this company has made a name for itself.
And we, as ClearPath Advisory, will bet our buy stand on MTN Group Limited with a target price of 243.12 South African rand and a target price of 243.12 South African rand, which suggests a 12.43 upside comparing to the current price of 174.12 South African rand. Therefore, MTN Group is best positioned for both conservative and long-term risk-tolerant investors. Now, MTN, using 3 big key main KPIs, so that is the revenue growth, to the profitability measures.
So please, they would have to start. Take it easy.
Who would have thought that a country birthed out from an apartheid will rise through the ashes as a leading telecommunication force in the telecommunication industry, as one of the most competitive in telecommunication industry? This just didn't happen. Through strategic government policies, through investment decisions, value for customer experience, this company has made a name for itself, becoming a force to reckon with.
As ClearPath Advisory, we bet a buy stand on MTN Group Limited with a target price of 243.3 South African.
Digital services, data and voice. MTN over the years has been able to achieve a larger revenue for their activities, which has improved their reach in Ghana and South Africa. MTN revenue has increased over the years for about 13.7 billion. Their connectivity services has helped in all these improvements. So MTN over the years has been adopting to the ESG framework of the UN developmental goals. So MTN has a strong leadership which consists of a 33% females, which also adjusts to the SDG 5, which is gender equality. MTN also have good governance, strong diversified expertise, which is helping to stay in the competitive markets in the world of financial and digital services. MTN, in relation to ESG, in doing for the environment, MTN has an ambition of 2040 achieving a project zero of carbon emission in the environment, and MTN is doing this through the reduction in the usage of fuel and diesel by bringing in solar panels and wind energy to support their activities. MTN also, in doing for people, channels this through the MTN Foundation, in which they provide potable drinking water and education to those in deprived areas. In governance, MTN is very strategic in it by providing anti-corruption and bribery, human rights, and cybersecurity in relation also to responsible taxing.
Having a historical analysis, checking the income statement, we could realize that the total revenue from 2020 to 2023 was increasing gradually, but at the start of 2024, at the end of 2024, it decreased sharply. And also our gross profit margin moved from 72% to 70% in 2024, which is very bad. Checking our EBITDA margin also, we could also realize that in the subsequent years, it increased from 44% to 30% in 2024, also showing the decline in its revenue. This was as a result of forex exchange losses and the Nigeria Naira devaluation. Also, with the balance sheet, we could realize that the total non-current assets initially increased from 235 to 288 in 2024, which we also noticed that it was declining as it moved forward. And also with our total equity, as a result of less cash flows into the company in 2024, it decreased. But projecting in 2025, we realized that as a move up from Ghana economy, as a change in our election, we could realize that the industry, or after the end of 2025, the revenues of MTN was increased, and it changed from that. So at the end of the equity and the liability from 2020 to 2024 had a destabilized way of increasing and decreasing.
At a target price of 243.21 ZAR, which is blended by the valuation of discounted cash flows and trading comparables, it indicates that there is an upside of 23.3%, which shows that the MTN share price is undervalued. Discounted cash flows by discounting the expected future cash flow using the weighted average cost of capital. Looking at the assumptions, the revenue is expected to grow at 8%, which is driven by the data usage growth, the fintech mobilization, and the network expansion. EBITDA margin is expected to increase from 39% to 42%. Considering WACC of 19% and a terminal growth of 4%, the discounted cash flow shows an enterprise value of 498 million with a net debt of 20 million and equity value of 380 million, which showing an implied share of 270. This indicates that MTN share is undervalued.
Using the trading comparables, we realized that we could benchmark MTN with other groups, which is Vodacom Group, Airtel Africa, CCL, Telcom SE, and Maku. And we had a multiple outreach, which is EV over revenue, EV over EBITDA, EV price over sales. And at the end of it all, we had a share implied price of 203 South African ZAR.
Even though MTN operates in a lot of high growth economy, it has experienced a lot of risks, such as operational risks, currency risks, and regulatory risks. Operational risks, such as the risks that occurs within the organization. Operational risks can be mitigated by cybersecurity investments, staff monitoring, and the likes. The currency risks are risks that occurs due to loss of currency in the and exchange rates. It can be mitigated by forward contracts. On the other hand, regulatory risks, these are risks that occurs during when there's a change in governments, in the economy, and it can be mitigated by compliance investments and geographic diversification.
MTN Group Limited is not just benefiting from the African global market, but is taking a stand to go beyond profitability and create value for customer base. We are Clear Path Advisory. Thank you.
We now take questions from our judges.
Yeah, so congratulations, you've done very well with your presentation. So my question is, you did mention that there are some competitors that MTN have, right? So what's stopping those competitors from replicating the strategy of MTN? And also, how do you see that affecting your analysis going forward?
Sorry, before you answer, let me just chip in. Since he's talking about competition, how do you put Starlink in the mix, looking at the contribution of data to MTN's revenue?
Okay, so MTN, despite its stats during the appetite period, has risen over the past 3 decades and has been envious in the industry markets because of their first mover advantage always. And MTN has consistently been branding itself to ensure that it catches larger percentage market share in various economies. Despite sometimes certain poor economic stability and external factors such as the Sudan economic environment, MTN has still taken certain strategic decisions to ensure that its revenue and profitability measures, which makes them stand out, to always be the best and also make sure they attract high customer base. Also, the recent acquisition of even IHS Towers, which other competitors haven't done, that makes MTN also be able to operate in the market, and also even giving a very strategic attention to even the financial sectors, because now we realize that MTN is even creating certain services which bankers, which financial institutions used to offer, which means that MTN is always taking strategic decisions and also making competitive decisions to ensure that it stands out despite the competition in the industry.
Okay, so you offered a buy recommendation.
Yes, please.
Data constitutes a significant portion of MTN's revenue. Assuming Starlink decide to enter the various markets of MTN, how do you think MTN is prepared to manage that? MTN Group is prepared to manage that, and how do you think that impacts your buy recommendation?
Okay, so I'm going to give you an insight and my colleague will add up. So we will see that in recent times, MTN is investing highly in 5G, which Starlink isn't. And MTN currently is also moving into certain rural and undeserved areas within economies, which Starlink is not able to get there. MTN also has high investment and enough capital. When you check their capital structure, you realize that they've been investing mainly into long-term sustainable measures, which will make them stand out to be able to offer the services and still be the largest market share in the economy.
Okay,
Right.
it's fine. If nobody else has, I think you did justice to it. Let me find out, the acquisition of IHS, how do you think it's directly impacts the valuation of the company?
Okay, so with that, MTN is acquiring 100% merger acquisition, which means that they are going to take over the whole valuation, the whole IHS Towers, pay off their debts. They're even rolling over the debts, although it has about 24% shareholder stake in IHS, which means that MTN is no longer going to rent towers to perform certain services, such as the fiber optic and its connectivity services, which will make them be able to go large into other economies and improve on their services, fintech solutions, the IoT deployments.
Don't answer all the questions.
Okay. Team Clearpath, good job so far. Yeah, I have 2 questions for you. Okay, can you let us in on the reason for your choice of valuation methods, and then what weights you place on them, and then why?
So with the valuation, we chose to use discounted cash flow and trading comparables because we see that with the discounted cash flows, it is the widely most used valuation approach in determining the value of a company. So we use the discounted cash flow for that. Then with the discounted cash flow, we use a WACC of 19% because when calculating for the cost of equity, we got a cost of equity of 18%. Then calculating for the weighted of the cost of equity and cost of debt, we arrive at a WACC of 19%. And we expected that the terminal growth rate of MTN is 4%. That's why we use 4% in determining the growth rate and a WACC of 19% in determining the discounted cash flows.
Okay. Why are you using discounted cash flows and trading comparables?
With the discounted cash flow, we found it that the discounted cash flow is the widely used valuation in discounting, in determining the value of a company, because with the discounted cash flow, it's able to determine the expected cash flows is able to determine the expected cash flows of the company.
Okay. Did you make any consideration for using, say, asset-based valuation methods, considering how capital-intensive the telco business is? Okay, and if you didn't choose that method, why did you opt for the methods that you used?
Okay, so just to add up to what he said, looking at the trade comparables, it gives the whole enterprise value of MTN, despite that is the equity value and that's of the debt aspect of MTN. Realize that the debt to assets of MTN Group is highly leveraged, although their debt service rate is one that is very recommendable, which makes debtors and lending institutions to continue to give out loans and give out funds for them because they trust MTN to be able to pay off their debts and also improve on their operations. Also, the DCF also shows the real intrinsic value of the company, what it entails, which the trade comparables doesn't. So we gave a 60% rate to DCF and a 40% to trade comparables, and on the average, the valuation of MTN Group Limited is a very good one.
Why didn't you consider sum of parts?
Okay, so with the please.
So, for instance, MTN has different service, like we have fintech, we have other units. So why didn't you consider, for instance, valuing each of those units and then summing? That's to help you to give us the motivation for using the valuation methodologies that you use.
Okay.
Okay, so we didn't use that because finding enough accurate data to use that is a challenge. And even by using it as a benchmark to compare with other competitors wasn't good and wasn't realistic. And therefore, as advisors, we need to stand firm with our valuation method so that investors don't go bankrupt in years to come.
Okay, so my question is, how does MTN's ESG strategy affect its long-term sustainability?
Okay, so MTN ESG affects its long-term sustainability in a way that, because it is, when you take like doing for planet Earth, although it is complying to the ESG requirement though, but by using the solar panels or wind energy to power their programs or their operations, it will also in the long term reduce their cost of operations, because that's by using the natural resources to power your operations, the cost of operations will go down. So I think that's one of them.
Also, MTN wants to tap into the $4 trillion that has been set aside for companies who go by ESG, which means that they are able to will get enough investment to operate in the long term and create value. And they're also complying with other SGS like climate actions, responsible consumption, gender equality, innovation, and infrastructure, which means that in the long term, MTN Group Limited will be a good.
Okay, thank you. My last question. You mentioned currency risks. Okay, so I mean, given that MTN operates in various markets with different currencies, some of which are quite volatile, how did you account for currency risks in your cash flow projections?
Okay, so with currency risks, we realize that although MTN is situated in diverse economies, such as economy like South Africa, which is a South Africa rand, Ghana economy, the Ghana cedis, we realize there are a lot of volatility and a lot of volatility in the currencies, and MTN has ensured that they use the forward contracts to lock the inflation or, let's say, the depreciation of certain currencies. And because it operates in diverse industry, they ensure that they comply or they think ahead to enter into certain contracts which will not make them lose off if a currency is to depreciate. For instance, in recent time, I realized that the South Africa rand and the USD dollar was a competitive one, but South African rand has still ensured sustainability over the years, which helps control certain risks like the exchange risk. Thank you.
Can I ask the last question? So give me a 1-minute pitch. The person who presented for financial analysis showed how MTN's revenue, profitability, and everything has fallen over the period, right? And he alluded to the fact, which is true, that the Naira had a significant impact on that. So how do you juxtapose that with your buy recommendation? And that is actually flowing from a next question.
Okay, so it's still a buy for MTN because despite the Naira and even Sudan economy, which has not been doing well, MTN planned ahead to shut down so that they don't run into losses and invest in other booming economies which are performing, such as the Ghanaian economy and the Uganda economy, for instance. Thereby, they'll be able to generate enough revenue from those economies whilst they wait for the other economies to rise up, then they move there as well. Thank you.
Well done.
Thank you very much.
I was going to save them from the last question, but Anas just didn't give up. I think we can put our hands together once again for them. It just gave me my first interview with KPMG and the kind of questions that were flowing towards me. When the gentleman said ZAR, it also took my mind to Access Bank. I was on a trading operations desk. So I called the counterpart and I was like, I want to trade so and so ZAR. I said, South African rand? I was like, yes. So, I mean, well done. We'll now invite our second team. Team 2 will be Sigma Capital Partners. Let's put our hands together for them. Welcome, Sigma. Is this Sigma in terms of signal or? Please, some of you can go to the other side. So for the ground rules, you have 10 minutes to present, after which there will be questions that you will be required to answer. We will signal you when to start.
Thank you very much. Are we using this? Oh no, I'll be moving one of you. No.
So try that. Like shift.
I pressed it, it's not.
So move up, among the slides and let's see.
That's what I'm doing.
is MTN Group able to scale up? Well, we noticed that they have a telco pivot where it's transitioned itself from just being a single server telecommunication provider to a multinational digital solutions provider through 4 growth engines, namely fintech, the digital infrastructure, their digital ecosystem, as well as their enterprise solutions. For instance, in the fintech space, they are able to cater to the underbanked and unbanked African population, estimating their monthly active user base to be over 64.3 million. And these growth engines are crucial to the growth of their subscriber base by 300 million as at the third quarter of 2024 in their 16 markets.
Okay, now moving on to the competitive landscape. MTN wins where it profits the most. In the key profit markets, Nigeria, Ghana, and Uganda, MTN is a market leader. But in the South African market, MTN comes second before Vodacom with a market share of 32%. Vodacom entered the market early and scaled up quickly, so that right now it dominates the fintech sector. Telkom and South Sea are also slowly eating up market share as they are becoming more competitive in the data pricing wars. And in other markets across Africa, MTN remains dominant, but that dominance is also making them a constant target for regulators. Okay, now on the Porter's Five Forces analysis, MTN is facing a new threat from satellite internet providers like Starlink. These satellite internet providers are bypassing the traditional telecom industry barriers in terms of infrastructure setup, going directly to the high broadband segment. And then in the industry, there's also very high competition between the rivals as they engage in data price wars, which is also pressuring the margins. And it's also very easy for the subscribers, particularly highly price-sensitive customers, to switch between the telecoms as they are often multi-SIMmed.
Now, moving on to the financial analysis, 2024 was indeed a bad year for MTN. Their net profit margin dropped sharply into the negative territory, and this is mainly due to the currency devaluation of some subsidiary levels, which translated to foreign exchange losses at the group level. Also, MTN managed to maintain their debt-to-equity ratio at a fair minimum point. You know, when companies are going through all these financial difficulties, they sometimes try to borrow to cushion their operations. But here the case, MTN's debt-to-equity ratio is at 1.12 times, which shows that in spite of all these difficulties, they were not relying so much on debt. And all these challenges pointed out to a better EBITDA margin in 2025. MTN Group surpassed its competitors in South Africa by having a growth in their EBITDA margin, which also led to the growing subscriber base in 2025. So when you look at their subscriber base, it increased from 2024 to 2025 third quarter, which is attributed to the fact that there is high demand in the fintech sector as well as the data sector. And also, their historical debt ratio has been on a downward trend, which is showing that MTN is trying to deleverage as well as maintain a resilient balance sheet. So looking forward, our projected revenue is optimistic, and then we are saying that coming 2029, MTN revenue is going to grow at a compound annual growth rate of 8.89%, which is attributed to the fact that their subscriber growth rate is going to increase at 3% annually, as well as fintech and data is going to increase at a compound annual growth rate of 24%. Even though voice is declining, the fintech growth and data growth would cushion this voice to bring out a better revenue forecast.
Okay, so the strong margins and strong cash flows are important for MTN, but for the long-term sustainability of the company, its ESG framework is very important. So environmentally, MTN is committed to reducing its carbon reliance, and this is evidenced by the reduction in the combined Scope 1 and Scope 2 emissions, as MTN is adopting solar energy, which is also cutting down their energy costs. And socially, MTN has spent 189.5 million rands on corporate social responsibility activities, benefiting 2 million beneficiaries, in the process nurturing loyalty in their customer base. And the governance side, the board is made up of 12 independent non-executives and 2 executives, ensuring transparency.
All right, so by now, Mr. Ernest is wondering how we're able to come up with a hold recommendation. With this, we use multiple valuation methodologies, and one of such we applied was absolute valuation methodology. With this, we had a beta of 1.6 and an industry or a terminal growth rate of 3%, which is consistent with MTN subscriber growth rate. With this, we had an equity cost of equity to be 12.8% with a weighted average cost of capital to be 11.77%, giving us an equity value of 357.1 billion and a share price of 189.59%. We also tried comparing MTN to HPS within the industry to put a value on MTN. We had an industry average of 6.0, giving us an equity value of 342.8 billion with a share price of 185.93%. To reconcile everything, we assign a 70% rate to their absolute valuation because of MTN, our strong confidence in MTN cash flows, and a 30% relative valuation because this one is mostly based on market sentiment. With this, we had a target price of 188.5% as against 179.18 as at 17 January 2026. With this, we had a target upside of 1.18%, affirming our hold recommendation. We also looked at some of the risks that investors might incur investing in MTN, and one of such is macroeconomic uncertainties, as my colleagues have spoken about, the Naira rate, the Naira valuation volatility, and also some regulatory challenges in some of the countries. With this, we also conducted a best and a worst case scenario. With this, we had 152, with the assumption that 50% additional devaluation in most of the currencies that they trade in, and also with the bull case, we had 225 South African rand, with assuming that the fintech industry is going to go successful. So to put everything into context, we believe that MTN provides a rare value opportunity irrespective of the economic headwinds. However, the market has already priced most of the structural drivers in MTN growth, which affirms our hold recommendation for MTN. Thank you.
Hello. Okay, so Team Sigma, that was a very good presentation, and congratulations at this stage as well. So my question is, you did mention an upside, right? So why not a buy? And also, MTN recently bought the IHS towers. How do you see that impacting their profitability in the future?
Okay, there is an upside. From our valuation, we saw that there is an upside, but the upside is minimal. It's only 5.18%. And also, when we did the valuation as of 17 January 2026, the deal with IHS Towers wasn't announced by then, right? So when we did our scenario analysis, we also included that in the book is that if there is a spin-off in the infrastructure biobab segment, and also the much more growth on the fintech side, there would be much more returns on that. So we're recommending the investors who have MTN shares right now to hold for further capital gains.
And just to add on to that, so as we mentioned, we did both financial analysis and the macroeconomic assessment of the markets that they operate in. Now, because of how many markets they operate in, they are susceptible to the volatility in these various markets, macroeconomic volatility. So Nigeria, for instance, even though the Naira is stabilizing just a bit, that 40% plus devaluation in 2024, even though it has reduced by now just a little, it is still a huge risk to investors as well, which will affect their share price in the future. So after assessing that financially they're viable, still macroeconomically there are still some threats or some risks to be careful of.
Okay, so now, well, I just wanted to ask a follow-up question. So now that you know about this IHS acquisition, do you think it has any impact on the valuation and your recommendation?
Yes, we have a book case for one of our scenarios, and we think that the IHS Towers deal is leaning towards that book case, so that is going to make our recommendations lean more towards the book case, so which will make it a yes.
How specifically do you think that acquisition is translating into the modeling?
So if you look at our book, we looked at the fintech industry, and the acquisition is basically going to help them to expand their coverage in terms of the fintech industry and other sectors of their revenue generation. And in addition to that, they are trying to also reduce their operational costs because they realize that acquiring it will help them to be able to manage most of their operational costs as compared to them leasing or hiring third parties to run their operations for them.
Yes, just to add on a little to that, IHS Towers manages 30,000 towers across 7 countries. So this means MTN will have much more infrastructure to penetrate through the market.
But they are not acquiring all, so you should check your facts. Some of them are being sold. I actually had a follow-on question on that. So you spoke about deleveraging, right? And then part of this is being, MTN is rolling over the debt into their books from this acquisition. So how do you think that is affecting your deleveraging points, which was part of your analysis?
So MTN has the target to build balance sheet resilience, which is to make sure that their debt is going down. So at the moment, they are trying so hard to focus more on equity financing than the debt so that their cash flows will become strong.
Yeah, but they are rolling the debt of IHS Towers onto their books.
Yes.
Actually increasing their leverage.
Yes, yes, I get that. Even though they are rolling the debt of IHS Towers into the book, for Nigerian, for instance, there has been a renewal of the IHS Towers to 2030. I think this is going to help them to maybe if they are leasing yearly, it would come with higher financing costs. But if they are able to capture a long duration, then it can subsidize the cost, which can contribute to the deleveraging abilities.
Okay, so I have another question. With the current declining yields, where the bond market doesn't seem very attractive, and you are recommending a hold for us, don't you think we have to put our money into equity, into MTN? And given that there is some kind of upside potential, do you think it's a good move for us to invest in MTN?
Sorry, I'd just like some clarification. When you say the bond market, are you referring to the Ghanaian bond market?
Yeah, so generally yields are down, generally, especially here in Ghana. So as an investor, do you think that it's a good move, even though you are recommending a hold, do you think it's a good move to still increase my position in MTN?
Yes, we believe that it is a good move to still keep your funds in MTN stocks, so I'm getting there. So it's good to keep your funds in the MTN stocks as well, and that's why we are recommending the hold. Now, with these developments, that as time goes on, we believe that it is possible that some of the projects that they roll out, some of the deals that they make, which we cannot obviously foresee because our valuation ended as of 17 January. But as these progressions go on, which we believe that are still geared towards the Ambition 2025 strategy of reducing operational risks, that would definitely increase their EBITDA and other key financials, therefore increasing their stock prices. So I believe that if you're asking for personal advice, it is important to keep a close eye on the market, and as they make these little projects and deals, you can slightly increase, but still be wary about some downfalls. That's why we are not pushing altogether for a buy, but a hold, but carefully towards a buy with time.
Okay, all right. Good answer, actually. So can you go to the slide on the financial analysis? No, not evaluation. Yes, financial analysis, yes. So the next one. If you look at the historical growth rates compared to your projections for the future, with all the market dynamics, the threat of competition in the data segment, and I mean, fintech not going to grow as widely as it has been in the past, don't you think your growth rates are too optimistic?
So I would just like to clarify, you said fintech is not likely to grow
as widely as it has in recent times. Wow, as in, the growth has been very phenomenal. Yes. It's not likely to be at the same rates going forward.
So,
yeah, if you disagree, you can.
So in terms of growth, we believe that it is still going to continue growing stably even if it might not be as wild as its initiation or initial growth rate, that growth is still important to take notice of. Now, in terms of we being overly optimistic, it's not so much about the growth in fintech, but how much they can dominate the fintech sector to be able to take the majority of that profits, even as the growth is still gradual. So with the gradual growth, we believe that MTN is positioning itself very well to dominate that market, even though generally fintech in Africa might not grow as quickly as it started.
Yeah, and in addition to that, with our assumptions we did for the revenue, projections, we valued the fintech separately, where we looked at how much each subscriber is bringing on board, and we use that to be able to determine that if the fintech is to grow at the rate that is growing, then the compound annual growth rate will be similar to the 8.89% that we are currently having.
Okay. Since we ran out of time, 2 more minutes. Can you talk us through how the currency risks, factored in your projections? Because MTN plays in various markets, right? Some of them have very volatile currencies. How did that factor in your financial projections?
Okay, so for our currency risk, I'm going to start with the long-term liabilities. So MTN outsourced loans from other countries overseas, more dominated in USD. So what we did was that because currency devaluation is so high in Africa, it makes the loan blows up. If they take maybe 5 USD from a foreign entity, currency rate can make it get to like, maybe at that point 5 USD was 1 cedi, but currency risk can make it get to like 3 cedis, which is making the loan like higher. So while we're modeling our long-term loan, we adjusted 5% buffer from the opening debt liability to cushion for any devaluation that comes from currency risk. Also, our lease liabilities, MTN leases in Africa, and sometimes if they are going to settle those leases, for instance in Nigeria, if MTN is going to settle a lease in Naira and the Naira has devaluated so well, it would cause them to have like more Naira instead of it will cause them to have like more Naira at hand to settle that loan. So for the lease liability as well, we checked the historical trend of the Naira devaluation, and it was around 5%, and we also adjusted for that buffer.
Okay, so is that to say that you expect what happened in the past to repeat itself in terms of the currency dynamics? Don't you think you may be wrong there? I mean, given all that is happening, the Naira has got to a point where it will be more stable, even the cedi.
Yes, so the 5% here is not is an average, right? We can't predict so much the rate at which currency is going to be devalued. So it was like an average of what has been happening in the past, just to serve as buffer.
Just to top up a bit, we did our research on nairametrics.com. We looked at the forecast for the Naira from 2025 to 2030, and in 2030, the Naira is expected to be about 2,000 Naira to 1 USD. Right now, it's about 1,200 to 1,400. Therefore, you can see that expectation by economists online, that research is there to be searched, shows that we are not underestimating the Nigerian market. Nonetheless, economics say that it is still expected to depreciate going forward.
Sorry, I didn't want to do this, but you don't think the currency impact will go through revenue? Because I didn't hear you talk about it impacting revenue at all. Revenue and cost, and then and then also know that the leases you alluded to, because of the acquisition of IHS Tower, they don't have to pay for leases anymore.
So looking at the financial analysis and the projections, we actually considered the macroeconomic risk, such as the devaluation of not just Naira, but also possible African currencies. So because of that, we modeled the voice at 1%, a flat growth rate, because we noticed that voice is actually the highest growing factor in the telecommunication space for Africa. So a lot more people are using their phones to to core, but at the same time too, it is declining in the MTN group's customer base. And we also use that to understand our fintech and data, because the 24% CAGR sustained rate was not just about Momo acceleration, but also about how the economic factors such as the GDP growth rate in countries like Uganda and Ghana are also going to impact the ability for people to use financial services.
Thank you very much.
Just in case, look at some of these things that we have alluded to and use it to better your presentation. There are a few missing links here and there, so make sure that you put it all together and then you argue the whole presentation towards a hold.
Let's put our hands together for them. Please have your seats. Frankly, I don't envy you guys. This is experience sitting in front of you and coming down at you. All right, so our next team is Team Apex. If Apex is here, please let's put our hands together for them as they walk in. Team Apex. Welcome. Some of you can go to the other side. Pointer is here. So before you start, hi. Two can be here, two can be at the other side, right? So before you start, you have 10 minutes for the presentations. When it gets to questions, one person answers the question, right? We want to save the time. So when you give the attempt for the question, we want to manage the time. And then also, okay. So we would allow you to go as much as possible. But for our judges, when the time for the questions is up, we'll please save them from you. Thank you very much. When you are ready, let us know then.
Good afternoon, judges, ladies and gentlemen. MTN Group is Africa's top telecommunications company. Despite its growth and market leadership, we believe that its shares are currently undervalued. We, as Team Apex, are recommending a buy for MTN shares at the 12-month target price of 236.25 South African Rand, representing an upside of 18.39% at the last closing price of 199.55 South African Rand as at 19 February 2026.
So now, what do we know about MTN Group? MTN Group was established in 1994, after which it achieved many milestones, like the acquisition of Investcom in 2006 and getting listed on the Ghana Stock Exchange in 2018, and also achieving its Ambition 2025 strategy. It is operating in 16 markets across Africa and is currently headed by the CEO, Ralph Mupita. It offers services like the fintech solutions, mobile services, infrastructure, and enterprise. Beyond the financials, MTN has proven itself in the ESG, gaining an AA rating from MSCI. Environmentally, MTN has reduced its Scope 1 and 2 emissions by 46.2%. And in governance, it has a 75% independent board and a strong ethics and compliance framework. Socially, MTN has a gender-balanced workforce with which it operates, with 43 of their female in workforce and 32 in leadership. MTN is also leveraging on Africa's youthful demographic, which has over 60% of their population being below the age of 25.
We also looked at the macro business environment of MTN through the pestle analysis. Politically, MTN faces regulatory pressures. Moving on to legally, MTN faces tax disputes and fines. MTN has strengthened its government engagement and regulatory compliance to deal with this risk. Economically, MTN faces currency volatility and high inflation. In response, MTN has adopted hedging strategies and improved its cost. Technologically, MTN is faced with cybersecurity threat. We also wanted to look at the competitive position of MTN in the South African market, comparing it to its main peers, Vodacom and Telkom. in terms of subscription, MTN is a scale ahead with a subscription base of 301.3 million, which is 35% more than the next peer competitor, Vodacom. By the first half of 2025, even though MTN experienced shocks in 2023 and 2024, by the first half of 2025, MTN has made a whopping revenue of 105.1 million and an EBITDA of 45.8 million, which shows that MTN clearly outperforms its peer competitors in the South African market. These are the key drivers that underpin our buy recommendation. Firstly, the share of MTN is undervalued. From our valuation, we predict an implied upside of 18.36. This is supported by the price analysis of MTN. By the persistence theory, we realize that when a phenomenon persists, there is a probability that that phenomenon is going to repeat. And so we can see that the MTN share price increased to 258 with some cyclical variations. And these cyclical variations are possible to persist. Also, MTN is in the maturity stage, and then it has room for value creation. Secondly, we realize that MTN's balance sheet is strengthening. If you look at MTN's liquidity ratios, there is no difference or little to no difference between the quick ratio and then the current ratio. Also, we can see that the liquidity ratios are declining. This shows that MTN is, or this may imply that MTN is investing its excess capital or excess cash into profitable ventures. Also, looking at the solvency ratio, we can see that the debt to equity ratio is declining over time from our forecast. We can also see that there is an increase in the interest coverage ratio. This is because MTN is deleveraging. And this is going to reduce the cost of equity, reduce the WACC, and therefore increase the value of MTN shares. Again, another reason why we support a buy recommendation is that the profitability of MTN is increasing across key margins. Even though in 2023 or between 2020 to 2024, Vodacom outperformed MTN in terms of operating margin and net profit margin, this diversion was due to MTN's elevated CapEx and then the restructuring effort by MTN to Ambition 2025. By the first half of 2025 and with our forecast, we can see that from 2024, MTN's profitability metrics will be rising, and this is even supported by the first half revenue, where MTN makes a revenue of almost more than 29% more than Vodacom, and then an EBITDA of more than 50% than Vodacom.
Okay, another driver for our buy recommendation is MTN's strategic focus, the Ambition 2025. Investors, MTN is no longer the traditional telecom you know. It is now transitioning to a digital platform. It is focusing on connectivity, fintech, and digital infrastructure. MTN is also optimizing in portfolio by exiting from non-core markets, example like Afghanistan and Guinea-Bissau and Guinea-Conakry. This will lead to operational efficiency, thereby positioning MTN above its competitors. Now, in investors, let's look at evaluation, where we selected 3 strategic valuations or techniques in our valuation methods. First is the DCF, which look at the projected cash flow of MTN at the present value. It gave us an intrinsic value of 230.39 South African rand with an upside of 15.45%. The assumptions we use are the terminal growth, cost of equity, cost of debt to be 32.02%, and WACC and then EBITDA, where we did a regression analysis of the South African share price, South African all share index against MTN's returns. In the sensitivity analysis we did, we saw that in the best case scenario, the share price will rise to 371.39 South African rand, which will increase the upside. Therefore, if you buy MTN shares now, you are going to get an upside even more than 15.45% when the conditions are favorable. And it is supported with our Tobin scale value of 1.2, where the market is seeing MTN to operate 20% above its book value of asset. Now, we choose the relative valuation model. This is what the market is saying that MTN's value or share price should be. It is a market sentiment by comparing its peers, Vodacom and Telkom. We did an analysis, and the relative valuation gave us an intrinsic price of 296.94 South African won with an upside of 49.41%. The same Tobinco Tobin skill analysis hold here. But you can see in the relative valuation, even in the worst case scenario, it is still higher than the current share price. Now, residual income, we look at the residual income over MTN. MTN, after taking care of after MTN is taking care of its shareholders' return. We look at that analysis, it gave us an intrinsic value of 204.3 South African rand with an upside of 2.35%. This is also saying a buy. Dear investors, the DCF, we look at the projected financial cost. The relative valuation, we look at the market sentiment, and the DCF, we look at taking consideration the cost, is all saying a buy. In the sensitive scenario analysis we did, where all favorables are worse, like currency volatility, especially depreciation in Nigeria, increased regulatory pressure, stagnation in fintech and in data growth, and persistence in persistent underperformance in core market, the share price will drop to 163.25. In the best case scenario, where all the conditions are favorable, share price will rise to 371.93.
After assessing the potential outcomes of our scenario analysis, we now examine some key risks that could impact our recommendation. We did this based on the severity and the frequency at which they occur. The main risk here is the macroeconomic volatility. Now, to mitigate this risk, MTN aims to shift Nigerians' EBITDA to below 40% in the next 24 months to reduce this concentration. Now, to mitigate operational risks, MTN aims to shift 20% of network investments into digital and fintech services to reduce reliance on telecom competition. And lastly, to reduce cybersecurity risks, MTN has established strong governance at the management and board level and has invested in strong cybersecurity systems. Dear investors, with improved financials, strong ESG performance, undervalued share price, and MTN Group's strategic focus, we stand by our buy decision, and we advise that investors should take advantage of the market now for the potential to gain 18.39% returns on their investments. Thank you.
So these are our appendix.
Yeah. Well done, Team Apex. Yeah, did a very good job. I just want to find out, on your financial analysis slide, you are very heavy on the historical. Can you take us through what your forecasts look like and what assumptions underline your forecasts going forward?
Thank you, Judge, for the question. So we forecasted from 2025 to 2029. Our growth rate in the forecast made use of, sometimes we use the arithmetic. We use the arithmetic when we have fluctuations, and so we take out the fluctuation and then we find the average of the stable ones. With the where we have a steady growth, then we use the geometric. So our forecast shows that MTN is going to improve in its profitability ratios. EBITDA is going to rise from the fall in 2024, which was below 40%, to up onto 47% in 2029. We are also going to see operating margin to also increase closer to EBITDA, and net profit margin to also increase. Why I was talking about the previous was because previously, looking at data or looking at financial statements, you realize that Vodacom outperforms MTN. So somebody will say, if Vodacom is outperforming MTN historically, why are you saying that we should invest in MTN and not Vodacom? That is why I was explaining that the historical outperformance was because MTN has elevated capex because it was doing more digital infrastructure, and MTN was also restructuring through its ambition 2025.
So don't you think the EBITDA margin for 2024, okay, looking at the level it was and the dynamics going forward, suggests that that is the normal trend going forward, instead of you expecting that it would jump? Why are you expecting that it will jump?
We are not expecting EBITDA to jump. However, we are expecting EBITDA to replicate the historic performance of MTN. If you can see, realize that in 2024, 2023, there was a dip. The dip was because there was severe Naira devaluation. There was forex losses that MTN was facing. There were impairment losses from Sudan. So these things affected MTN's profitability metrics. But we want to say that with our forecast, MTN is going to improve not beyond its historic, but somewhere around the historic or a little above the historic, not so much.
Okay. So you're still telling me that these factors that caused EBITDA to dip are the only ones that you took cognizance of going forward. There are other factors that could cause EBITDA to stay at those levels. For instance, I mean, the threat of competition in the data segment, I mean, the heavy investment in capital, for instance, could, affect their margins going forward. Those dynamics didn't tell you any story different from what you projected?
We looked at all those dynamics. We looked at them. But then what we actually did was that looking at MTN's ambition 2025, where MTN is looking at portfolio optimization, in markets where they are not performing well, like Afghanistan, like Guinea-Bissau, they are exiting this non-core market. And so once they exit this non-core market, the competitors' increase in market share will not impact MTN so much. Even in the cases where MTN was experiencing volatility in MTN, we are talking about MTN trying to reduce its group EBITDA in Nigeria below 40%, so as to reduce the concentration of the revenue that MTN generates from Nigeria, so that it does not affect its group statement significantly.
In addition to that, one core thing about Ambition 2025 is optimize their portfolio. So they started exiting from non-core markets. This will make them focus on their core market to generate more revenue and EBITDA.
Okay, so my question has to do with revenue. You indicated that MTN is in a mature state at the very opening slide, right? And it's leading into decline. So if we just oppose that with the fact that competition is increasing, there is the threat of Starlink and everything. Why do you still think we should buy? Don't you think there is going to be a significant decline in revenue?
Thank you very much for the question. So MTN is in the maturity stage. A firm being in the maturity stage doesn't mean that the firm has ceased to grow. Actually, it means that the firm is growing, but the firm is growing at a steady rate. And so MTN being in the maturity stage also means that MTN is still going to increase in revenue. That is why in our next slide, please go. In our next slide, we show that even by the first half, please sorry. Even by the first half of 2025, realize that MTN's revenue went up from 81.6 in 2024 to 105, which shows around 29% increment. Its EBITDA also increased by 50% as compared to Vodacom. So saying MTN is a maturity state does not mean MTN is not going to grow, but the growth is going to be steady.
What was your terminal growth rate for your DCF?
3.5.
Significant. Okay, so what motivated you using 3.5?
We use the real GDP of South Africa, which is 1.0, with the average, 1.1, yes, with the average inflation of 2.4. When you add them, you get 3.5, which is below the long-term inflation of that is the Nigeria, MTN group itself, the long-term inflation of the MTN. When you compare all its marketplaces, the 3.5 is below the long-term inflation. So we chose that one, the conservative side.
Okay, so my question is, how is your recommendation and your equity story different from market expectation? Because you seem to have very positive, different from what the market expects, because you seem to have very high expectation of MTN. So how is that different from market expectation?
Even though EMH asserts that markets are efficient, and so the market will quickly and rapidly adjust when there are any new information, we realize that in reality, this adjustment takes time. So what we are saying is that as at the time we did the evaluation, if you consider our report, as at the time we did the valuation, our value for MTN was 175. As at the time we did the valuation, the closing price of MTN was 175. But with our slides, you see that the closing price is 199, which means the market is still incorporating this new information. And then once it's fully incorporated, you will see that the upside will show.
Talking about new information, how do you think the acquisition of IHS is going to impact on your valuation? That's my first question. The second one is your bear case and bull case scenarios. It's too wide from each other. You are asking me to put my money into it, and with this wide band, I can go as low as 18% or as high as
80%.
Yeah, so convince me so that I'm sure that I'm not going to go to the bear. So you can answer.
Thank you, madam. But if you could give me a little information about IHS.
This week, MTN acquired IHS Tower. MTN used to own. You haven't read the news. Okay, so you can leave it. Read about it. You can skip that question when you go read about it, and then think about how it impacts your valuation, just in case you go to the next stage.
Okay. So with the valuation, the bull and bear case, the values that we are showing are actually the values from the DCF. And so we looked at the bull case was when we increase our assumptions. We make our assumptions so drastic such that it is more on the negative side. So we are saying that if we make our assumptions so drastic such that it is more on the negative side, the person that is investing in MTN is going to lose 18.20. Now, investment is a risk. Investment is a risk. And so there is a chance of a return and there is a chance of a loss. But we are trying to say that when you make a loss, your loss will be 18.20.
Okay. In addition to that, the reason why we build the scenario on the DCF is that the DCF captures the cash flow of MTN. So based on the cash flow of MTN and MTN's ambition 2025 forward, when you invest in MTN, your downside will be low, but your upside will be really high, will be whooping high because
of time. I noticed that you only used 2 companies for your relative valuation analysis. What was your exclusion criteria for the other companies? Because MTN has investment in multiple markets, so why did you exclude some others?
Thank you for the question. So MTN is headquartered in South Africa, and so its consolidated statements are in South African rand. And in South Africa, the 2 main competitors of MTN are Vodacom and Telkom. That is why we use the Vodacom and Telkom to look at the relative valuation of MTN.
In addition to that, we can see that when we are coming to the subscribers, we look at all other competitors of MTN. But with the revenue and the EBITDA, because the companies report their findings, earnings in South African rand, that is why we base on that. If you want to add like Airtel Africa, when we are now converting from the US, that the way they report it, we might have FX losses there, or in terms of inflation and the forex exchange rate. That is why we focus on, in the revenue and EBITDA, we focus on the competitors in South Africa. But when we came to the subscription basis, we look at all the competitors.
Thank you very much. Let's put our hands together for them. Please, you can have your seats. If I was a judge, I would be asking them which of them holds an MTN or is buying an MTN stock. You can't tell us to buy and you are not holding one yourself, right? Next on our list is Team Atlas. Please, let's welcome Team Atlas. Please, for the purposes of the camera, let's all come to this side. Let's put our hands together for them. You're welcome. You would have 10 minutes to present. After the 10 minutes, the judges will take 10 to ask you questions. So the pointer is here. When you're ready, you let us know. Just text it and then.
My name is. Good afternoon, everyone. My name is Percy Abroko. I'm the person of Michael Forujam. I'm the person of Kenneth Okuswado.
And I'm Esajam Nowusu.
we are issuing a sell recommendation for MTN Group at a target price of 69.77 Rand, representing a downside of 58.84% from the last closing price of 169.5 Rand as at 31st December 2025. MTN Group is a telecommunications company that operates in 16 markets across Africa, but has its headquarters in Johannesburg, South Africa. It provides data, voice, fintech, digital and enterprise solutions. The group's operations are guided by the Ambition 2025 strategy, focusing on connectivity leadership, fintech and financial inclusion, and digital platform development. It is majorly owned by institutional investors. And the financial year 2024 revenue by product shows how the group is increasingly monetizing its geographic footprint in line with the Ambition 2025 strategy. This, with data and fintech coming in with 50.1% of the revenue contribution in 2024. And in the geographic aspect, MTN South Africa contributed the greatest portion in 2024. As ESG considerations become more material to investors' capital allocation decisions, MTN has embedded ESG into its strategic framework. So, it commits to a net zero strategy. This is aimed at a 50% reduction in greenhouse gas emissions by 2030 against its baseline in 2021. This is supported by structured waste and water management initiatives. Socially, it has impacted education with 2,600 scholarships. It directs 75% of its corporate social investment to ICT-related projects, and the remaining goes to national priority areas such as women empowerment. It also has speak up and early discrimination detection mechanisms in its operations. All these are underpinned by its governance. It operates a 14-member board comprising of 2 executives and 12 non-executive directors. The diversity indicators of the board include its gender, race, nationality, and diverse skill sets. MTN's ESG framework promotes the sustainability of its operations, and this provides an important context for assessing its competitiveness in the African telecom industry.
All right, so we move to the industry overview and competitive positioning. We believe that the telecommunications industry has transitioned from being a merely utility-based industry to now the backbone of the African and global economy. This is proven by the 9% contribution of the industry to Africa's GDP in the year 2024. Now, MTN touts itself to be the biggest player in the market. To make this more understandable and to appreciate this fact, we set their figures against their competitors in the market, and for that, we took 3 key market indicators. We took subscribers. Now, when you look at subscriber base, MTN outpaces all its competitors by leaps and bounds. They recently surpassed the 300 million subscriber base mark and are well on their way to the 350, possibly 400 million subscriber base mark. When it comes to revenue growth, we see that MTN places third, second to Vodacom and Orange. Now, this is not a case of they not performing properly. It's just a currency translating thing. When you narrow their performance down to their market, you can see that they are performing well, but then because majority of their revenue is coming from Nigeria, when they translate, it looks like the growth rate is stagnant, about 1%. Now, when you look at average revenue per user, how much you're able to derive, how much value you're able to derive from one user, MTN is only best, or is only comes second to just Vodacom Group. Okay. Now, we employed Michael Porter's 5 forces outlook to understand how the industry works. The first thing we considered was the threat of new entrants. This we believe is low. Why? What do you mean? It's low because to enter the industry, you require a lot of capital expenditure. It's a big boys industry. No one just comes in. The second thing we consider is the threat of substitutes. It's modest in our regard. This is because traditionally what the industry offered. Okay, so what the industry offered, which is voice data, is being replaced by apps such as WhatsApp, Twitter, and etc. Internal revenue is very, very high. Every single company in the industry is leveraging, is improving as the days go by. When you consider bargaining power of suppliers, it's also very high in our regard. This is because most of the operational infrastructure are leveraged from companies called tower companies, and wherever they say goes. When we look at the bargaining power of buyers, it is moderate. This is because most phones have 2 SIM slots. If you are dissatisfied with MTN, the only thing you care is search cost in finding the Vodacom office, and you are good to go. So indicating a downside of
valuation and our assumptions was based on 3 core investment pillars. The first pillar was the stagnant revenue growth as against rising operating costs. When we take a look at their revenue trends and their profit margins over the 5-year period from 2020, you can see a decline in their revenue margin as well as their profit margin, while the cumulative annual growth rate for their revenue over the 5-year period was 1%, whereas cost was increasing faster at a cumulative annual growth rate of 3%, indicating that the group's operating expenses is rising faster than their revenue margin. The second pillar we looked at was the declining returns and the low margin. Because now you can see that their return on asset and return on equity, being the shareholder return metrics, also been on the decline over the 5-year period, as impacted by their revenue margins. Additionally, you see that their finance costs as a percentage of their revenue contributed up to or consumed up to 10% of their revenue in full year 2024, meaning that MTN's the impact of debt is weighing heavily on their balance sheet. And the third pieces that we looked at was their high leverage and escalating finance costs. And when we look at their liability to equity ratio as well as their debt to equity ratio, you see that it's been on a marginal decline over the 5-year period, but it's still high in the industry. I want to take a snapshot of that debt burden. When we calculated their enterprise value, the net debt accumulated up to 94% of their enterprise value, meaning that MTN's assets are more reliant on debt as compared to equity in their balance sheet. So when it comes to the financial analysis was made out 3 main areas, which is the profitability, their leverage, and their capex investment. So when it comes to their profitability, over the past 5 years, you can tell that the profitability has been on a downward trend. However, in comparison to their investments in capex, it has been increasing. Now, if you compare this to the fact that their cash flow from operations have also been declining over the past 5 years, you can get the fact that if this continues into the future, it will have a negative impact on the group. When we move on to their leverage ratio, their debt to EBITDA has been increasing. Their debt to total capital currently stands at 8%, and their finance cost takes up 80% of their EBIT. When we look at their current ratio, it's currently below 1, which is 0.95. Then we move on to valuation. So with the valuation, we focus on 4 main valuation methodologies: the DDM, the DCF, the golden growth, and the relative valuations. With the relative valuations, we focus more on price to book and price to sales. So with price to book ratios, we got a valuation of 138, price to sales of 108. The golden growth gave us 116 rand. The discounted cash flow gave us 0.35, and our DDM gave us 32 rand. Now when you move on to our WACC assumptions, we got the risk-free rate from South Africa's 10-year bond yield, the equity risk premium from the Modara, and the beta from Simply Wall Street, which gave us a cost of equity of 15.5 after using the capital. The cost of debt gave us 11.78, WACC of 11.63. For the perpetuity growth rate, we got it from JSMP, which was 4.30, and then when we get to the golden growth discount rate, we use 9.05, which is a 30-year bond yield for South Africa. When it comes to the valuation, DDM had a weighting of 50%. The reason why we use this was because we believe MTN is a mature company. You can tell this by the fact that when my colleague was presenting earlier, he said that the revenue has been growing at a peak of only 1%. And because of this, we believe it is a mature company. When we move on to the golden growth, we valued it at 25% because most of the data we use for the golden growth are either historical or actual market data. There was almost no assumptions using this valuation methodology. Then the relative valuation, 10% each for price to book and price to sales, and then the DCF had a 5% weighting. When we move on, the next will be the investment. So for our analysis of MTN Group, we arrived at 6 key investments that I believe can affect the group's equity value going forward. And the significant risks that affect the group's equity value was the macroeconomic volatility and currency translation rate. As you can see from the diagrams here, that FX translation poses a huge risk for MTN as a chunk of its revenue in Nigeria is not consolidated in the group revenue due to FX consolidation or FX translation. Additionally, you can see that the next risk that poses a threat to their revenue or their equity value is the increased regulatory pressure, tax uncertainty, and compliance. Additionally, you see that financial liquidity is a huge risk for MTN, as we saw when we were analyzing their leverage metrics. The fourth risk that we analyzed was their cybersecurity, network resilience, and technology risk, followed by the strategy execution and competitive risk. And the final risk that we looked at was ESG issues and human capital risk in the market. Now, what we are saying, or to sum up our presentation, we are basically saying that as their strong subsidiaries like MTN Nigeria, MTN Ghana are operating very well,
it does not translate to group equity value as their operating excellence is trapped in FX consolidation. Additionally, we are seeing that as the ROE is tumbling, it is impacting or the rising finance cost and leverage, the equity value is being impaired. Finally, a significant valuation disconnect as MTN is pricing their shares above their intrinsic value, all underpinned by sell recommendation for 1 year implied price of 69.77 rand, the downside of 58.84%. Thank you very much.
Okay, so my question is, can you walk me through the margins and like the input cost that they have, and also talk to me about the pricing power that MTN has?
Okay, so I'll speak to the rising power aspect. Now, we are talking about price in terms of their offerings, that's their data offerings, their SMS offerings, if I'm clear. Now, MTN, why it purports itself to be a big player is that beyond their operational efficiency, they also have goodwill in the market. They've been around for a while relative to all their competitors, and hence, if you meet customers who are very, very loyal, they will stick to MTN. And what that means is that anytime MTN changes their price, they still remain, and they have pricing control in the regard. My brother will speak to the other part.
With the EBIT margins and the revenue growth, they've been decreasing. Now, in 2024, it was mainly because of the Naira devaluation, which my colleague mentioned earlier. Now, the reason why the devaluation had a very huge impact on MTN was that over the past 5 years, we saw that MTN's revenue from Nigeria made up 32% of the total revenue, and which is one of the main reasons for the declining margin.
I mean, don't you think, look at your profit margins, it's staying around 10 at least, apart from 23 and 24. Don't you think you are giving too much weight to 23 and 24 to the detriment of what the company is likely to do? Have you looked at, for instance, half year Q1 2025 to see if there is any reversal for you to test your investment thesis?
So, even if we were given a lot of weight to 2024 and 2023, the figure over the past 5 years has still been 1%. And I don't think just 2023 and 2024 might have had an impact on the figure. So even if we were to grow revenue at figure, it would still have a negative impact.
MTN just acquired IHS Tower. I think in your, I think the earlier slide, you said it's a big boys play. I don't remember who said that. And that there is a lot of supplier power, right? Now that you have done a backward integration, do you think that affects your sell recommendation in any way?
If it could affect, because IHS Tower, that means other telcos would be depending on them, leading to more revenue generation. However, when it comes to the IHS, the MTN's planning on making the acquisition through cash from IHS's balance sheet and then cash from its own balance sheet, but then they also want to add debt. And from our presentation, you can see that one of the main things impacting MTN itself has been their debt burden. So if they decide that they are going to continue, they are going to add an additional layer of debt for the acquisition, it's still going to have a negative impact.
Sorry, I was asking whether you check the debt coverage ratio to arrive at your debt assertion, right? Debt burden assertion. So, for instance, if you compared like debt to EBITDA, for instance, if you looked at debt to EBITDA, for instance, and compared it to its peers, does it look like it's overburdened, or you looked at specific? Just walk me through what led you to that, and then whether you looked at coverage ratios, etc.
So we didn't look at the peers for the industry, that's MTN's peers. When it comes to the level, we looked at MTN specific. But then even if we were to put that aside, when we did the relative valuation of MTN using the average price to sales and price to book ratio, MTN was still selling at an overvalue of.
It's a capital intensive industry, right? So it's best for you to you had considered that, probably it may have weighed in on the view on
Thank you very much. So, to shed more light on their debt burden, when we analyze their liquidity risk, when we combine that with the macro volatility or macroeconomic volatility from Nigeria, we see that their debt to cash flow ratio has also been an increase. Now, in 2024, which was significantly impacted by the Naira devaluation, you can see that their debt was 7.14 times their free cash flow, which was very high, even if you compare it to their peers. Now, we are not saying that their industry is not capital intensive. Yes, it is capital intensive, but when we combine it with the FX translation as well as the broader macroeconomics landscape, that when you combine both of them, it has a very significant impact on their operations. Now, when you look at their current ratio and their quick ratio, you can see that they have all been on a decline. Since 2021, you can see that their current ratio has also been below 1, even though, yes, their industry is very capex intensive. When you combine that with the macroeconomic landscape in which some of its markets operate in, like Nigeria, which contributes a significant portion of their revenue, you can see that, yes, it is, even though it's a leverage in telco industry, it's going to have a significant impact on their
valuation. All right. Okay, so well done, Team Atlas. I mean, you made a bold call by asking us to sell MTN, and throughout your presentation, I was looking for that convincing argument. Okay, if you're asking us to sell a company with the expectation that the downside is about 60%, that's quite significant. For you to convince us that you didn't overdwell on, say, 2024, what's the cash flow projections like going forward? Get worse or because we're expecting a very big downward movement in the share price. Story also compared with MTN's peers looking like going forward. Competitors are likely to do much better, or they have a different strategy, so they are likely to do much better. So people will be flocking.
So if I understand you the question, you want more clarification on the way our revenues were projected and the impact of FX or the Naira devaluation.
Is on capex, which will not impact on. So just show us and then.
Okay, so I don't have it in the slides, but then when it comes to MTN's revenue, how we predicted revenue, we used an average in the rand. So since the report in rand, their revenue from 2020 to 2024 were all in rand. Now in 2024, that's the year the Naira devaluation happened. And so when we were doing it, we used the growth rate, but then we found an average, meaning in a way it factors in the currency devaluation that happened in 2024. And that's what we use for the projections up to 2030.
I think for purposes of those online, what we'll do is that until we change the battery account swap, we add 1 extra minute.
saying that just run us through the assumptions and motivation for your forecast.
So most of the forecasts were done using an average. Most of them were done using the lower of average or median. Now, the reason of this was because we know that with average, the Naira devaluation factors in, and also with average, if one year does better than the other, it impacts the whole year.
there is something else.
The reason for the work assumption.
So speaking to the average part, now MTN Group reports its subsidiaries individually and then consolidates it. Now, when you're calculating average, we know that when there's an outlier in the data set, it affects the central tendency. It affects your central tendency. MTN Nigeria, to us, was the problem because they are bringing figures that look so incoherent with what everyone else is doing. So to reflect it properly, we use the average. The problem is MTN Nigeria doesn't look like it's going to be changing. Nigeria doesn't look like they're going to be stabilizing on the macroeconomic front. The challenges are still there. So to just tone down that effect, we said, okay, then let's cumulatively take the average so that with the outliers are accounted for and then we could work with it.
Okay, so my question is, what are the key risks to your business and what will happen if you need to change the recommendation? Okay, so for the key risks that affect the first and the macroeconomic volatility and transmission risk. Now we've already spoken about the naira devaluation. I want to take a closer look at MTN Nigeria's revenue by the year. There has been in trillions, but when we consolidate it in the group's revenue or reported revenue, you can see that it is almost marginal. The gain is marginal, whereas Nigeria is always on the rise. So that presented a very key risk to MTN. Additionally, since it is operating in a very regulated environment, it also presents a key risk for MTN. As we look at MTN Ghana, when the e-levy was impacted, it affected their subscribers. And also, to change our recommendation, we want to see a decline or we want to see MTN adopt more equity financing as compared to debt, as the debt burden also affects their balance sheet and leverage ratios.
Thank you very much. Let's put our hands together for them. Please have your seats. First group of analysts to recommend a sell. That was a bold one. But the beauty of it all is that, I mean, you can make a recommendation. How you defend it is what actually matters. Next, we have Alpha Capital. Alpha, if they are here, let's welcome Alpha Capital. Please come to this side of the podium or the stage. Please, all of you here so that the cameras can properly capture you. I'll give you the pointer. When you are ready to roll, you can let us know. So you have 10 minutes to make your presentation, 10 minutes, and then our judges will also take turns to ask you questions.
Hello. Did you know that you sitting right here stands the chance of owning the backbone of Africa's digital renaissance? Introducing to you MTN, the largest, most influential infrastructure for building digital economies. The team is Alpha Capital, and today we recommend a buy for MTN Group at target price 230.51 with an upside of 31% at closing 13th January 26. This recommendation is backed by 3 solid thesis points. Firstly, MTN's unrivaled Pan-African footprint, fintech as the new growth engine, and finally, operational excellence and its capital discipline unlocking shareholder value. Founded in 1994 with over 30 years in the industry and an estimated of 300 million subscribers all over 16 markets, MTN is currently positioned as a telco giant in the industry. It also has these key revenue streams such as its data, voice, fintech, digital services, and wholesale, accounting for a lifetime revenue of over 160 billion rands, estimated to be $10 billion. Now, MTN operates in the African telco industry, which is currently moving from basic connectivity to advanced digital services, characterized by oligopolistic competitors who own majority stake. High inflation and interest rates also act as industry headwinds that pressures margins and impact costs. According to the GSMA report, Africa accounts for 65% of global mobile money usage. This, coupled with its under-penetration for data usage, serves as industry tailwinds, which MTN can capitalize to maintain its position as the market leader.
MTN competitive positioning starts with its footprint. With over 300 million subscribers, outpacing its key competitors like Vodacom, Airtel, and Orange. MTN holds dominance in its key markets with 52% market share in Nigeria. MTN dominates the competitive advantage built on scale, network quality, and fintech reach, positioning itself as the key leader in the industry, outpacing its rivals. While in the competitive edge, it builds on infrastructure such as 5G, positioning itself as 5G pioneer in the African industry. While in the fintech mobile usage, MTN has 1.2 million users and 63.1 agents, driving high transaction values and volume.
Our investment thesis is based on three pillars. Unrivaled Pan-African footprint in Nigerian residents. Nigeria has a population of 230 million with over 85 million MTN subscribers. Nigeria is MTN's biggest market, contributing largely to its revenue and its EBITDA margins. After the devaluation of the Nigerian naira, causing a loss in its foreign exchange in 2024, quarter 1 to quarter 3 of 2025 shows recovery with EBITDA margins increasing and equity being positive, positioning Nigeria to contribute 40% of the gross EBITDA margin by 2026. The market values Nigeria as a traditional telecommunication company. However, we see a valuation revisiting. MTN sees Nigeria's revenue mix as shifting from basic connectivity to advanced fintech services, mainly remittances and also insurance and lending. MTN is not just improving, but also is becoming much more efficient through its expense efficiency program, whereby it aims to save 8 billion by 2026, and it's currently it has achieved 66.6% of this as of 2025, as of H1 2025. Moving on to its infrastructure, through Biobab and its recent acquisition of IHS Tower for 6.02 billion, MTN is becoming much more efficient, making much more profit, and also having their costs being reduced. MTN has exited 5 markets, namely Afghanistan, Syria, Guinea-Bissau, Guinea-Conakry, and Yemen. This is because of the political instability, macroeconomic volatility, and also low growth potential in these markets. We projected revenue to grow at a compound annual growth rate of 9.59% over the forecasted period, which is driven by the subscriber growth and also key segments such as data, voice, and also fintech. This is expected to be seen in its margins, which is also improving over the years. And this is mainly supported by their expense efficiency program, and also this helps improve their profitability over the years. EBITDA margin is expected to increase from 34.1% to 47.45% over the projected period. For its dividend per share, it's expected to increase to 858 cents. And return on investment capital is also expected to improve, showing that MTN is making earnings from its investment in its key segments such as fintech and also digital services. Also, its operating free cash flow is expected to rise from 15 billion to 71 billion, which is supported by their disciplined capital expenditure, with their capex intensity levels being between 14% to 18%. In addition to a strong financial foundation, MTN's ESG strategy positions it as a market leader in the sustainability realm of telecom companies in Africa. Its ESG strategy is based on 4 key pillars: doing it right, doing it for people, doing it for planet, and doing it for growth, which covers all its ESG bases. In terms of its environmental goals, MTN plans to reduce its scope 1 and 2 greenhouse gas emissions by 50% by the year 2030, and it's already made strides in this, reducing them by 46% by the year 2024, far outpacing its targets. In terms of its social goals, MTN is based on diversity and inclusion, and plans to have 50% of the workforce be female by the year 2030. As well as this, its governance is very strong. MTN has 12 out of 14 members of the board being independent non-executive directors, ensuring that there's maximum independence in decision making. Varied tenure also allows them to have a blend of experience as well as new perspectives on the board. All of these come together to allow MTN to reach all of its sustainable development goals. After looking at the current state of the firm, we decided to value MTN, and we did this using a 50-30-20% blend of the DCF valuation, sum of the parts valuation, and relative valuation. We decided to give the DCF valuation the highest weighting because it allows us to do an intrinsic valuation of MTN using its operating cash flow, which gives us the truest sense of its operating efficiency. Zooming in on the DCF specifically, we employed a disciplined approach to forecasting its key line items, and coupled with our WACC of 13.4%, we arrived at an implied share price of 213 rand per share, giving us a 21% upside. This was driven mainly by margin expansion due to the expense efficiency program and robust revenue. To test how resilient our DCF model was, we used the sensitivity analysis. We asked the question, what is driving value in MTN, coupled with the average revenue per user and varying figures of terminal growth rate and the cost of capital. The table below shows that MTN is highly sensitive to the cost of capital. Next, we also ran 10,000 iterations on the Monte Carlo simulation. The result, a right skew distribution, implying that upsides are very large, whilst downsides are very limited. To unlock MTN's potential or value, we used the sum of the parts valuation with an implied price of 262.52. MTN's upside was 49.16%. Lastly, we benchmarked MTN using its peers such as Safaricom, Etisalat, and Vodacom with an industry median of 6.5. MTN with its 5.7 median was valued at 226.5 rand, implying 28.7% upside.
Indeed, there is no investment without risk, and most material of them being macroeconomic volatility. Persistent high inflation and interest rates in key markets leads to lower consumer spending and higher operational costs. This was seen in a valuation where a 2% increase in our WACC results in a 20% decrease in our enterprise value. However, the company currently mitigates these risks through a stringent implementation of its expense efficiency program. Indeed, the facts are clear. MTN, the digital backbone, is the digital backbone of Africa's renaissance. However, the current market is pricing it at a discount due to misinterpretation of temporal transitory headwinds as permanent risk. However, this goes to affirm our buy recommendation of MTN Group. Thank you.
Okay, so congrats, Team Alpha. That was a very good presentation. My question is, what would happen for you to change your investment recommendation? Okay, so one thing that has happened for us to change our investment recommendation is Nigeria's macroeconomic conditions to significantly worsen in the near future. In 2024, the depreciation of the Nigerian naira significantly affected MTN. Since it is now largest market, we think that if the naira were to significantly depreciate again, or any other macroeconomic headwinds to hit that country, we would have to change our recommendation.
So by asking us to buy, are you
was saying that with the investment that has been done in Nigeria, with the investment in data centers and areas where they allow to allow the investment of 240 million USD dollars in Nigeria for data centers, with the use of AI, which is the future of the technology, allows Nigeria to be in a good position to continue as a good competitive industry in the industry. However, we also see it as a good alignment with the support of fintech advantages, such that they support more they support the startups and the enterprises through the use of fintech systems such as mobile money.
Additionally, the purchase of the IHS towers for about $2.2 billion also kind of enables MTN to match its local debt with its local revenue, thereby mitigating the effect. Also, currently, Nigeria has also released its FX rating, so FX is now determined by the market and not necessarily the central bank, which also adds for some flexibility. Additionally, they've also reduced the amount of importation of oil, and we know that oil affects all parts of businesses. As Dangote has also started its oil refinery, it also goes to release some pressures on the industry and stabilize industry growth.
All right. So, I see that throughout your presentation, you're very optimistic on the Nigerian story and then how fintech is going to aid MTN's growth. Can you just give highlights of what you expect to happen to the other segments of the business? For instance, data in particular and voice, and then the other subsidiaries, okay, and some of the risks that the other subsidiaries face are likely to materialize in other countries as well. How do you account for currency risks across the group as well? Tell me the story.
So with the other segments of revenue, we account for that the population growth in Africa, as estimated by GSMA, is growing rapidly. So with the youth adopting to the use of data and everything coming into online, that means the data industry and the data industry will still be in revenue for the company.
Okay, so the data question, right? I want to know what would happen with the other subsidiaries. For instance, South Africa, Ghana. You bet big on Nigeria. Expect Nigeria to do much better than it has. What will happen to Ghana? What will happen to South Africa?
Okay, so currently, Ghana is the largest fintech segment of MTN. We expect this to continue to grow in the future as the population of Ghana continues to increase and mobile phone penetration also increases as well. In South Africa, they are currently having problems with prepaid data, and they are in very strong price competition with competitors such as Airtel, Vodacom, and Telkom in South Africa. However, they are putting a lot of resources into expanding their distribution, which means that they are paying more people to push their data bundles as well as reducing prices. This is currently the pricing margin, but in the future we expect it to allow them to regain their entrenched position in that prepaid market and reduce the depression in the South African market. Now,
in addition, also with the Southern and Eastern African market for MTN, there is a heavy investment in Uganda where they are allowing the usage of more data in other segments to allow them to increase the value and the usage of MTN.
Additionally, for the other business segments such as wholesale and digital, MTN seeks to diversify its revenues in those cases where now MTN does not just profit itself, but through MTN, you, the user, can also profit through enterprise services.
Okay, so did you look at any key industry ratios and how was the
some key industry ratios we looked at the net debt to EBITDA ratio. Currently, that is usually between 1 to 1.5 for the African telecommunications industry, and it is trending downward as more of the firms are looking to reduce the amount of debt which has been an improvement and shows how fintech, which is their new growth segment, is very capital light and high margin. And because they are focusing more on that, their margins are increasing. Okay, so did you look at average revenue per user, churn rate, how was that doing for MTN, and did you also look at that for other competitors?
So for that, we looked at like the various countries they operate in, the average revenue per user. So with that, we looked at like the various macroeconomic factors that will play into like the average revenue per user, maybe like the spending of like the population, their income and all that, and we factor that to grow it like over the years, to project it over the years. So that is how we consider the average revenue per user. And for the other subsidiaries, it's quite lower compared to MTN because of MTN's footprint across Africa and its like presence in its how do you call it, internet coverage all over Africa, which gives them a higher edge in terms of its average revenue per user.
So let me just piggyback on what so in terms of revenue, I see the historical growth rate, for instance, is less than 1%. So what motivated your bullish revenue outlook?
Yeah, so the CAGR of less than 1%, as we said, was due to the 2024 Naira depreciation. This significantly depressed their revenue that year. As you can see, in all the years leading up to 2024, their revenue was on an upward trajectory. So, which tells us that the macroeconomic stability of its key markets are very significant driver in its revenue. What motivates us, as we've already said or stated, is because their growth trajectory of the African population is very promising. And the difference between the amount of people using phones, the amount of people using the actual internet is very large as well. So we think that MTN can close the gap between the amount of people using phones and the amount of people using the internet and capitalize on that to sell some of their services such as data, voice, and others.
How do you think competition play a role in all these things? For instance, Starlink is coming aggressively into Africa, into these markets. How do you think it affects your valuation?
So MTN is currently a very trusted provider. In Ghana, for example, almost 70% of people use MTN. Because of this entrenched position in the market due to its vast network infrastructure, we believe that MTN will be able to stand the test of time because of its network effects as well. When you use MTN and more people use MTN, it becomes more necessary to use MTN. For example, if you use MTN Momo and more people use it, there are more mobile money agents around you, meaning you'll be like, maybe I should just switch to MTN since it will be easier to use. Because of this, it just gives MTN an advantage over any new entrant into the market and allows them to keep their position safe.
Okay, no, so because of time, I'll just add that, this is a competition and you may move on to the next stage. If you happen to move on to the next stage or in future presentations of this nature, please, as much as possible, make sure you are presenting, not reciting. Okay, because we got a lot of color when you started answering our questions during the Q&A. But during your presentation, there was a lot of recitals, so a lot of things were missing, So please make sure, if you move on to the next stage, make sure you are presenting, touch on like the key things that, judges or analysts will be looking out for as well. So, well done.
Thank you.
Thank you. It is said that if you want to cause a fight,
Terminal growth rate of 2%. And using all these, this year says MTN is valued at 215 Rand, which is a 35% upside from our current share price of 159 Rand. On to the next valuation methods.
Okay, with our relative valuation, MTN had a target price of 197.99 with an upside of 24%, which confirmed that the company is undervalued. MTN traded at a PE of 10.37 and EV to revenue of 1.78, which is far cheaper as compared to its peers, which can be seen from the table above. With the DDM, MTN had a target price of 25.61 with a downside of negative 84%, with cost of equity of 19.8% and sustainable growth rate of 10%. Our team valued MTN based on these three models. DCF model with a rate of 70% because of its ability to determine the intrinsic value based on the free cash flow analysis, comes with rate of 25%, and DDM with rate of 5% because of the net loss recorded in 2024. However, on the journey to achieve this 23% upside that we are recommending, MTN is going to encounter some risks and some challenges such as political and microeconomic condition risks, cyber and information security risks. However, MTN is going to mitigate this through their proactive risk management by adjusting the tariff in Nigeria and also their partnership with MasterCard, which will help them mitigate the cyber and information security risks. To conclude,
ladies and gentlemen, we stand on our buy recommendation of a 23% upside that MTN is number 1, positioned to excel. 2, is rebound in financial and operational momentum. 3, is game-changing fintech platform. MTN, everywhere you go. Thank you very much.
Yeah, well done, team. That was a very good presentation. So my question is, did you stress test your valuation model with any other analysis in order to reinforce your recommendation? And also, did you, if not, like if you didn't do that, right, what could you have done in order to stress test it, or what models could you have used to make those analysis?
Okay, so we did actually do that. We employed a sensitivity analysis, varying key indicators, which is our work. Please, can we go to the appendix? Yes. So we stress test our target price. So we have, if things go well for MTN, we can see it at the green side of it, and if things do not go well for MTN, we see it at the far side of it. Thank you.
And what's the story?
The story behind. Okay, so so after doing all these things, we found out that if things go well, after the stress test, it reaffirms our buy recommendation that if WACC is 12% and the terminal growth rate of MTN is at 2%, the target price will move to 215 Rand. And if things do not go well, it will be at 155 Rand. But things are going to go well since the news reaffirms our buy recommendation.
So I think the price of MTN as of yesterday is very close to your target price. So since you are presenting to us today, how does it impact your recommendation?
Okay, we did our evaluation in last year, and we are really happy to see that it's very close to this price. Yes, that's true. So, yeah.
By your recommendation,
Pardon?
does it affect your recommendation? Not your target price. We can see that you were right, but
we think it just confirmed our recommendation. We are recommending a buy, and we are saying if things go well, MTN is going to have a target price of 250. So where it is now confirmed that our valuation is indeed intact.
Thank you.
Okay, so now that we are there, are you going to change your recommendation, or what's your what do you think?
It's still
The recommendation.
Yeah, since we are already at the tag.
yes. Yes.
No, we are not changing it.
No, we are not changing. We are maintaining. We are really happy that it's still there. So we are maintaining that recommendation. So it's just reaffirming what we did as clear as we used conservative methods to do this, and now it's working out for us.
Okay, so I think a lot of your assertion or your thesis was around the fact that there is a lot of growth potential in Africa, and MTN is a leader. Now, how do you think another leader coming into the market to disrupt the sectors that MTN is dominant in would impact your valuation and your recommendation? So for instance, Starlink could come into the data space. We could have other fintechs disrupting the Momo space. How do you think that is going to affect it? And did you account for that in your forecast and your valuation?
Yes, a new operator coming in could affect MTN, but MTN already has a huge subscriber base already in Africa. So a new operator coming in could affect it, but then MTN will still be strong, will still have a stronghold over Africa.
So a giant, I'm talking about a giant, yeah.
No matter how giant that you are, based on the SWOT analysis that we conducted, MTN now gets to know its opportunities and some threats. And some threats are some of the giants who will be coming. So MTN is now aware of it. So they will stand on their leading market efficiency to build up to fight against that giant that will be coming. Thank you. Yes, but based on the SWOT analysis, we saw some threats, we saw some weakness. So based on that, we predict our target price.
Okay. All right. So can you go to your valuation? Okay. So for your DCF assumptions, right? Can you tell us how you arrived at each of them?
Okay.
Or what was your source?
With our beta, we used the covariance of the returns of the stock and also the returns of the market over the variance of the market to get the beta. And with the cost of equity over 5 years. Over 5 years. Daily. Yes. And with our cost of equity, we used the CAPM model to get that one. And we also added the country risk premium of 4.02%. And with the cost of debt, we used their historic finance cost, which represents their actual interest expenses to get the cost of debt. And with the WACC, we used proportions of both capitals to get a terminal growth rate of 2% to get as our assumptions of our DCF.
Yeah, so how did you arrive at the terminal growth rate of 2%? What was the basis?
So I'll answer that. So to arrive at our terminal growth rate of 2%, we took into account, first of all, where MTN Group is located, which is South Africa. Then we also look at the historic trends of MTN's growth over the year. Then the last thing we took into account is the subsidiary. So we found out that 2024 was bad for MTN, though it made revenue. So we did not want to be over optimistic about that campaign. So we decided to be very conservative. That's how we arrived at that.
Okay. So still on your valuation, did you satisfy yourselves that these methods are the best to evaluate a telco, right? Especially considering, what has just happened with the acquisition of IHS and even the trend of, because of the 5G rollouts, there's a lot of capital injection in the telco business. Did you factor in other valuation methods that could account for these dynamics?
We stick to this one, the DCF, the comps, and the DDM, because with the DCF, it's capturing their intrinsic value based on their ability to generate cash by projecting future cash flows. and also the comms, picking market sentiment to value the company, and also the DDM. Yes.
To add on, we picked the DCF because MTN, money works into MTN every single second in its data, fintech, and voice. A research was done by GSMA and it was reported in Tech Africa 7 months ago that Africa represents a young generation, which is majorly populated by the Gen Zs and the Gen Alpha. And then these class of generations are more into social media usage. So using the cash flow would definitely tell the story for.
So in the interest of time, right,
Yes.
I'll ask my last question. Most of the factors that you have going for MTN, for which reason you think there's going to be an upside, apply to the competition. Is there something in particular or a particular advantage that MTN has that the competition will not be able to match up to? For instance, my colleague mentioned the coming in of Starlink. A lot of enterprises are going for Starlink services, which is some revenue that they would lose. But then you are still very optimistic on MTN, and you use very general factors which will benefit Telkom South Africa, will benefit Vodacom, etc. What advantage does MTN have over all of these competitors or its peers?
Okay, so I want to say MTN is forward looking. First of all, they want to capture the largest tower infrastructure, which is IHS. So that's one of the first step or one advantage MTN has compared to its peers. And next is its large subscriber base. You see, people normally stick with what they have been using over a long period of time. It's difficult for some people to change. So I believe with, first of all, acquiring or proposing to acquire IHS and its large subscriber base is what stands MTN out. Next is data remittance is quite overlooked, and that is another way MTN stands out amongst its peers.
Okay, so you seem to be very positive about MTN. What will happen for you to change your recommendation, and what assumptions did you use in order to reach this buy recommendation? How realistic is those assumptions, and what will happen for you to change your recommendation?
Yeah. So I'll talk about it, why we believe our assumptions are optimistic assumptions. Smartphone penetration is expected to increase, and this will bring out a whole lot of revenue through data and also fintech. MTN is trying to promote financial inclusion. So a thing that will make us change our recommendation on this would be it's not being able to reach its targets through its strategies. So that's what will cause us to change. It's in appendix. Okay. We moved it to the appendix.
All right. Thank you very much. Let's put our hands together for them. Please have your seat. I was going to ask them what else I should check out, but I think they are far gone. Now, it's been a long run of presentation. We are having our final group. So if 360 Insights is ready, please let's put our hands together for 360 Insights. 360 Insights. So I'll be expecting that the insight should be 360. Please, all of you, come here. So the ground rules, a reminder, 10 minutes to present, after which you will be having your questions. Please, you try to test your pointer.
Good day, ladies and gentlemen. It is an honor and privilege to stand before you as 360 to present to you a company that is listed on the Johannesburg Stock Exchange and is ranked top tier in telecommunication service in Africa with one burning question in mind: buy, hold or sell. Today we present to you MTN Group. MTN Group is a premier Pan-African telecommunication leader, yet it remains significantly undervalued despite its dominant market position. As of 4 December 2025, a stock traded for 157 South African rand and 88 cents. That is why today, 360 Insights are here to issue a strong buy recommendation with a target price of 269 South African rand and 90 cents. These targets represent a 71% upside, driven by a massive base of over 3 million subscribers, rapid fintech expansion, and a robust digital infrastructure strategy. Our analysis confirms that MTN is strategically positioned to capitalize on surging data and financial service demand across its 16 countries. Over to the business description. Established in 1994 and headquartered in Johannesburg, MTN is Africa's largest mobile operator, providing connectivity and financial service to its customers.
MTN's 30-year journey shows a resilient transformation from a South African startup to a Pan-African telecommunication giant, successfully expanding into 16 countries across Africa, with a $5.5 billion deal being the acquisition of Investicom before the $1.7 billion US regulatory fine in Nigeria. MTN is transitioning from a traditional telco operator into a digital hub through its Ambition 2025 strategy. MTN is unlocking value through its digital growth platforms like Momo, API Marketplace, and enterprise services. MTN dominates the market with over 300 million subscribers and a market over $20 billion US market cap, relatively higher as compared to that of its competitors like Vodacom, with subscribers of approximately 142 million. MTN's market dominant position can be attested in countries like Ghana, with a market share of 82%, and Uganda, with a market share of 54%. According to the telecommunications industry report, the industry is estimated to grow by 5.4%, driven by factors such as data consumption explosion, over-the-top service demand drivers, evolution beyond connectivity. However, the industry faces challenges such as rising pressure due to factors such as high electricity and diesel costs. Now analyzing the industry using Porter's 5 forces, threat of new entrants remains low due to high capital expenditure in the industry. Bargaining power of buyers remains moderate due to the power of consumer groups. Threat of substitutes remains high due to emerging technology such as satellite internet. Bargaining power of suppliers remains high due to the fact that they are reliant on limited tower codes in the industry. Competitive rivalry still remains high due to the fight for larger market share.
MTN's ESG profile is a key value driver, not just a compliance check. Based on IFC methodology, we've rated MTN as category B, which means moderate environmental impact, but elevated social and governance risk due to the volatility of the African jurisdiction they find themselves in. However, MTN has transformed. 25% of their ESG, of their executive pay, is tied directly to their ESG metrics. They've also committed to net zero by 2040, which is 10 years ahead of the standard telecom industry practices. Already, Project Zero has delivered $379,000 US in energy cost savings in just 2 quarters. This earns them an MSCI AA rating and recognition as Africa's #1 company for doing good. Also, they score S&P Global rating of 49/100 and Sustainalytics rating of 22.2. MTN's material risk remains managed by Innovated. Talk of the regulatory, energy, legal, and cyber risks they face. How then does MTN create value despite all these challenges? Environmentally, their net zero target by 2040 and broadband coverage increase ensures that diesel cost remains lower and network uptime goes high. Their data users of 158 million and Momo users of 63 million is a financial inclusion at a large scale. Also, their board independence of 86% and ESG link pay of 25% ensures accountability when MTN leaders are making decisions.
MTN is surging ahead, offering golden opportunities for forward-thinking investors. Now, what makes MTN a strong investment candidate? First and foremost, the revenue acceleration of data service. Data service now contributes 39% to MTN's total revenue. That was from in 2020, it stood at 27%. And in Africa, the average cost for 1 GB data is $0.37. And then smartphone penetration is expected to rise from the 55% to 88% as at 2030. Secondly, the fintech growth engine. The fintech is the crown jewel or the new dawn. Fintech has a total number of 63.4 million users. that process over $320 billion annually. Recently, MasterCard valued this platform at $5.2 billion. Fintech is expected to reach a revenue target of 20% by 2028. This is not just a number, but it shows the embedded optionality MTN has as it's transitioning from a telco to a techco. And then finally, the aggressive capital investments made by MTN. MTN is investing heavily in technology and in efficiency. The 5G rollout, the fiber optics, and then the fintech skill is set to strategically position MTN to capitalize on future prospects. And then moving on to our financial analysis. MTN Financials tells a story of a fundamentally sound company. However, it's navigating through a massive and then severe forex shock. Looking at the profitability ratios, the gross margins has moderately held a stable range within 70 to 74%. The EBITDA margin, despite being under pressure, has been resilient, averaging 43% throughout the cycle. And then the headline, the net profits, dipping to negative 6% in 2024. This was as a result of the naira devaluation and not as a result of operational deterioration. The average revenue per countries. Our ARPU for the countries averaged from $4 to $3.62. And then the churn rate critically has been improving by declining from 4% to 3.2%, indicating that MTN has a great customer satisfaction and then great customer stickiness. And then to our liquidity ratios, the liquidity of MTN is adequate but tight. Looking at the current ratios, that average from 0.96 times, and it's normal for a telecom industry. And then the efficiency ratio, the working capital of MTN gives it a competitive advantage because the activities of MTN is largely financed by its suppliers, and MTN takes an average of 10 months to pay back its debts to its creditors.
Moving on to valuation, MTN Group trades below its intrinsic value, and our total valuation of the company uncovers this. We valued MTN Group, used four main approaches. With our company comparable analysis, we benchmarked MTN Group against its peers, and we used the forward PE ratio, the forward EV to EBITDA multiple, and the forward free cash flow. From our football field chart, we can see that all these multiples gave us an upside. Assigning equal weight to these multiples, we had a 21% implied upside, telling us the company share is undervalued compared to its peers. Since MTN is a multinational company, we moved on to value the company with sum of the parts, where we valued MTN subsidiaries using the EV to sales ratio. Summing up these multiples, we had an implied upside of 16%, indicating the company shares is undervalued. With our DDM model, we forecasted the dividend payments for the next 5 years and discounted it with a WACC of 15% and a sustainable long-term growth rate of 6%. This gave us a downside due to MTN low dividend payout ratio. Finally, we valued the company with a discounted cash flow model, where we forecasted the unleveraged free cash flow of MTN for the next 5 years and discounted it with a WACC of 13% and a long-term growth rate of 1.4%. This gave us an upside of 34%, reinforcing our buy recommendation for the company. We moved on to conduct the valuation stress test to see how the share price would be. So if MTN underperforms our assumption, the share price is going to go low as 147 South African rand. And in the best case scenario, where MTN overperforms our assumption, the share price is going to go high as 335. We conducted 10,000 simulations on the share price using the Monte Carlo, which we applied on our DCF, with a long-term horizon of 2 years, standard deviation of 0.9, and cost of equity of 17%. It gave us an upside of 39%, reinforcing our buy recommendation for the company. Now, moving on to our risks. As we recommend a buy, investors should be mindful of certain risks that MTN is exposed to and how they are being mitigated. So MTN is exposed to exchange rate risks and regulatory risks. And to mitigate against this risk, MTN Group is now using forward contract to hedge its risk against forex and is now adopting an automated compliance system with its regulatory risks. So what are some key events that could facilitate our buy recommendation? The continuous expansion of the mobile money services across borders is expected to drive high margin fintech revenue growth. And also the expansion of the 5G network coverage in key markets such as Ghana and South Africa is expected to increase premium data usage, thereby boosting average revenue per user.
So, given MTN strengthening fundamental and improving financial outlook, we reaffirm our buy recommendations to investors seeking long-term returns. MTN, connecting Africa, compounding value, a clear buy. Thank you.
Okay, Team 360, that was a very good presentation. I like your slide on the average revenue per user as well as a rating for the ESG. So my question is, you mentioned that MTN is in a very high competitive industry. Why should I put my money in MTN when you think that there's a lot of high competition?
Okay, thank you for the question. So MTN is strategically investing in CapEx to capture the 5.4% growth rate of Africa Telecom. Just recently, they are on a deal to acquire IHS Towers, which is the major tower producer in Africa. So we see MTN investing heavily in CapEx compared with its competitors, giving them a competitive advantage to capture the growth that is coming for the next years.
Please, to add up, MTN also, although there are a lot of competitors in the industry, yes, so MTN is finding a way that will give it competitive advantage. Recently, MTN is partnering with MasterCard in terms of its fintech, and also in terms of satellite, MTN is partnering with Starlink, that's LEO satellite. So it will give MTN some sort of competitive advantage over its competitors.
All right, so I'll ask a follow-up question on the heavy investment in CapEx, right? In your financial analysis, it was very heavy on the historical. We didn't see much on the projections going forward. So how does the heavy investment in CapEx impact on capital intensity going forward in your projections? And then also highlight what your financial projections for key elements are going forward as you answer the question.
All right, so with the CapEx, like we said, MTN is investing heavily in 5G rollouts, the fintech scale, and then also the fiber optics. You can see that in 2023, they invested a whopping sum of 41 billion South African rand.
You're still talking about the past.
Yes, I'm going to take you there. So, yeah. So, and then 2024, they paused to digest the investment they had in 2023. So, and then they're planning of rolling out the same investment in Benin of about $300 million, and then $1 billion in Ghana and South Africa. And then this would help MTN in the near future, the smartphone penetration in Africa, that's expected to rise to 8% in 2030. That means that people are going to use more smartphones. And then the more smartphones they use, they need data to, access the social medias. And then, yeah.
It's also to add up, MTN Group has now set a target to invest 16 to 18% of their revenue from now to 2030 in CapEx. This is why they are now acquiring IHS Towers. So MTN, due to this target, we believe that going on in the future, MTN is always going to be in the range of 16% to 18% of their cash being invested in CapEx. Hence our advice. That's why we're saying MTN is investing heavily in CapEx.
Okay.
Please, for the CapEx.
No, your general forecast on the financial analysis.
So we forecasted the revenue of MTN Group using a 5-year. Yes, okay. So here is our this year forecast. So we're using a 5-year year-on-year group and a cumulative growth rate of MTN. We forecasted the key line items of their financial statements, their revenue, their cost of service, and we ran it in the base case and the best case, the base case, and the worst case scenarios. So with our revenue, we go back. Please go back. Okay, so with our revenue, in our base case scenario, we forecasted that MTN revenue is going to grow by 5% in the near future. That is in our base case scenario. And in our worst case scenario, it's going to grow by 3%. And in our best case scenario, it's going to grow by 7%. So, okay, so we based on the projections made by the African telecom industry to grow by 5.4%. And we looked at the past performance of MTN. MTN did ambition 2025 to reach a sum of 300 million subscribers. And at the third quarter of 2025, they exceeded that target. So going forward, we believe that MTN is going to grow by even more than that 5.4% that they are going. Okay, so we moved on to forecast the cost of equity. using the year-on-year growth, so cost of service. So on our best case scenario, we forecasted that their cost is going to grow by 26%, yes. And in our base case scenario, their cost is going to increase by 24%. And in the worst case scenario, their cost is going to increase by 30%. So we used these assumptions to forecast MTN performance for the next 5 years up to 2030. Percentage, yes, please. Yes, and all the line items is based on their sales. So like the 5% here means like their cost of sales is 5% of their revenue. Yes, so based on that, we forecasted.
Okay, all right. So my next question, I mean, I must commend you for the detail and then how you approached your ESG analysis, and then your evaluation methods were also quite broad. You're one of the few teams that included some of the parts. But I didn't get what weights you applied to each of the evaluation methods and the imports behind that.
So yeah, these are the weights we assigned. We assigned 60% to the comms, 55% to DCF, and then 5% to DDM. All right.
Okay, so you actually didn't assign any weight to the sum of the parts, even though you did an analysis.
Yes, assigning weights there would have increased our upside, and then we want to scale the upside down. Yes.
You want to scale the upside down based on what?
An upside of about 90% was looking so high, so that's why we didn't assign
But
weights to
it doesn't look possible.
Yeah. So
Yes, please. Okay, so please, with the analyzing a multinational company like MTN, we decided to assign a weight of 60% to our comparable company analysis due to the high risks embedded in it. And with our DCF model, based on our assumptions, we assigned a weight of 35%. But with the sum of the other parts, we used the EV to sales ratio multiple in conducting the analysis, and we valued MTN most revenue contributors, which is MTN South Africa, MTN Nigeria, and MTN Ghana. But we arrived at an implied upside of 16%. So we used that to confirm our analysis and know that the company shares is really undervalued.
Okay, so my last question, I mean, since we are on some of the parts, what's your outlook for the currency performance in the key markets, and how did that factor in your projections going forward?
Okay, so MTN major issue is the currency depreciation in Nigeria. But as of the third quarter of 2024, based on the Nigerian Central Bank, the Naira is really performing good. And Africa economy, based on the forecast of the World Bank, is expected to increase. So based on that, we factored in our analysis that though foreign currency loss is affecting MTN, but based on the market sentiment now, we expect MTN currency to be stable for our 5-year period. And even in our valuation, we factored this in our analysis when calculating our cost of service and other costs. We factored the foreign exchange loss in it. We forecasted it and we factored it in our analysis.
Okay, so with the ESG, you wrote a B, right? Rating. Kindly walk me through how you got it and explain if it's high or low depending on the range for the ESGs.
All right, so an IFC category B is between 7.1 to 8.4. And the reason why MTN is rated as category B is because of these following reasons. Their line of work is when we say category B, it means their environmental risks are quite limited, right? MTN deals in data centers. They deal with towers and things. So if there is if there are risks over there, what they need to do is just have policies, just mitigate those risks with policies and something they can. It's very easy to mitigate those risks as compared to something like an oil company where the risk mitigation will be difficult. Maybe they have to acquire new land or something. But for category B, it means it's medium Category B means medium. When you go to category C, that's worst. Category A is the best.
Can I ask my final question? So, in this era of ethical investing, why would you
You have
say,
30 seconds to answer.
why would you say a B-rated company is such a strong buy?
All right. Coupled with their B rating, they also have an MSCI double A rating. That's the when we say an MSCI double rating, it means it's very easy for them to mitigate their risk. Also, their S&P score was 45 out of 100 in 2023. 2024, it went to 49 out of 100. And they are also in the medium sector. So MTN is still, through their ESG, their environmental side, is trying to also mitigate a lot of these risks. And their sustainability risk is also in the medium range between 20 and 30.
Well done.
Thank you, 360 Insights. Kindly have your seats. Thank you very much. I think those has been very great presentations. And let me add, as far as when I was your age, I'm not sure I'll be able to face this level of experience with such confidence. So I think you've done yourselves proud. We'll be going for our lunch. Whilst we are going for lunch, our judges will also be compiling their results. So this is the order. We'll be using the elevators down. So please let's note the order. First, we'll have the teams and the faculty. The teams and the faculty would go down first. Then we'll have our judges, industry mentors, graders, and CFA society members. After that, if you are a student and you are also present, you will be wait after those, then you also follow downstairs, and other attendees will follow. All right, so please, if you want to use the stairs too, you are free to do so. Thank you very much. Yeah, so I think lunch is 1 hour. Maybe so by 40 minutes time, you should be getting ready to come up here. Thank you very much. I want to save them from you.
Sometimes AI-generated text, or even our own writing when you're trying to sound formal, can come across
Thank you. Bro, everything cool.
Will you say anything for Kalasit? Will you say anything for Kalasit? Huh? Will you say anything for Kalasit? Like equipment, say something.
Everything.
Since yesterday, no.
You don't take it smoothie?
Where is it?
I thought
Okay.
the plan was to get you smoothie.
Yeah, they did, but I don't know where it is. Please, downstairs, ground floor.
And it's me for lunch.
Oh, okay. All right.
So you really guys want to say something? No, do you understand what I'm saying?
No,
Would they really come and say
the food is
because
more
right now,
costly.
you as
At
you're
this point,
here,
it's-
can you come and help me collect the Let's go and collect the result. It's actually good that you have the comments because I would send it to them.
No, I'm thinking of a remark.
He's done it.
It is.
He did a welcome address.
Well, welcome address different from small to small.
Yeah. No, for some, you know,
What about us?
as this now, as they want to.
Yes, you're the one I'm looking for.
Brenda, how's it going now?
It's fine. Yeah, I'm just waiting for you. She said she doesn't want it.
What do you mean? You don't want
Let's win.
Which energy are you going to use to do the polish?
No, it's not yet. Oh, they didn't let him. Oh, what? I saw Paul down and I told him, hey, thank you guys. Yeah. Oh, he told me.
I feel.
Yeah, they'll do it. They're the ones that take pictures. She said to me, coming down, but I didn't realize it was already done. We have your laptop. Problem solving Excel thing.
My laptop is on the sixth floor, so you can go down.
No, I have to do the college.
You have to run
Yeah,
Ghana.
so just go to the desert floor.
You have to run Ghana. I'm telling you, you have to run Ghana.
I go now for that.
Hello, how are you? Fine, thank you.
That's Anita.
From the forecast dinner.
Yes. She's not what?
You should be saying anything. We're not shooting one. Yeah, I don't have a video. We have a motion picture. Oh, but we don't have a video. Don't worry, by next year we'll have a motion.
Just give me this.
I was like, hey, is that how you are? Thank you. One, two, three, 4, 5, 6, 7, yes. Are you going to bring your laptop? There was in a yellow room. You should go there.
Yeah.
Okay. Yeah. Yes, I've picked yours. Yes, I'm going to call it then. Downstairs,
Downstairs,
on
ground
the
floor.
ground floor.
So ground floor, and then the cafeteria is just outside.
I mean, once you get to the down, you see the
Once
ongoing.
you come out, you see. Sorry, I have to put the ground floor. Yeah, ground floor. You see you won't use the exit that you came through. It's a staff exit. Yeah, on the other side. Yeah. High current things.
they may decide what to have. So just get a 5 pound and when you and then take it. So that's you know what? Yeah, inside mixed with the one. There's a lady there. She's an elder. She's wearing a dress. She's different from all of them. The others are wearing white, so she's like, yeah. So tell her that. Yeah, you can you can inform that you are taking from like if we tell we are taking the food for the driver and that you are taking 5 pounds but 5 pounds for the driver and that I even put some packs there for the extra 2, not it was 6. You understand? So we brought an extra pack, so they should what's that? No, she should just give. So right now the main thing she should just give about what's the vibe. So just tell her that, like she knows that I brought the pack, and when she's expecting to do extra money to get it, and then there's yours also inside for the other the pack upstairs. So she still has to go ahead to do other packs, not just. Yeah, tell her you're taking them from for the driver. You're taking 5 for now. Just tell her you're taking 5. If anything, call me. Let me put it together. If she doesn't understand. Exactly. But you can just stand close to the door and let them spend point the 70 pounds down. Okay? Or you look at it how you can wait there. Let's give a little bit of space behind. The rest, they're packing it. So there's no sound there. Even the whole thing is, you need to reduce it. Because, yeah, because their certificate has to. Hello? Who would it? For who? The driver. Yeah. I'm coming down. For the driver, I'm coming down. No, she'll put it on. It should be on the table. Just like yeah, she has to remove this and then so. So she remove it. What? No. It should be in there. Yeah, she has arranged it according to the list. So just hide. So just let it like when she comes, she has it all. Which one was first? Do you remember? Okay. So bring that one. So let's let's clear this one. Yeah, but it should be arranged. There's still some. Welcome. I don't know. You remember that word? I went for graduation yesterday. And your graduation? Yeah. In terms of how we are now, Miss Black, hey, don't for manana. I work with the now one day, now one day, but now I don't say I'm never come. I thought you are so busy. There's a man said, oh, I'm not busy. What's the video? Still for them to be able to do it. And I always do it. I can do it. You hear me out. Me brodo. Essa é a palavra que eu estava falando. Não, mas tá. Come up and lunch crazy than it. By this time, she lets you people down there collect your pay, so that when the TV are there, you come with them, then we also come with. That's how it's. In the make us think about this time, yeah, we do this thing. Then when they are done, then they come and collect. Business for the amount of people. Oh, yes. This one, this. Ah, they were supposed to do it in the morning. Yeah. And it wasn't coming. No, their main focus of the research was MPA. So everybody was presenting on MPA. So you either advise whether like they should sell MTN to another company or MTN should adopt like ways that they can manage them. Yes, and then also like get more gain to their company so that the company will become beneficial for them instead of them. So me, I feel like they shouldn't have been used MTN. They should have used Telestel. Telestel. That company has been sold for more than 4 times. Because my grandfather used to work there. It was formerly known as Ghana Telecom. Then they changed to One Touch. They sold it back to Ghana Telecom. Then Ghana Telecom sold it to Vodafone. Now Vodafone is what? And sold it to what? Telestel. How many times did they sell the company? So that's the company has used to do their wow. Yes. It affects you, but you don't know that it affects. It does. It does. The people who work there haven't seen that it's affecting us. See how Vodafone works. The people who work in the who are affected. It will. No, it won't. Because how lay off Ghanaians. Now, one who they
Who said you don't lay off Ghanaians?
you don't understand.
If they are to sell MTN to you, and let's say they sell it to maybe a company like those five, and they are coming, they will definitely lay off.
That one is the managers.
Hey, almost transfer in the workers.
The common problem of paying is cash and card. Why we are always investing their plan. Like some of them, management really
Most of the heads of departments they will buy, they will employ their own people and tell you that they know how to manage their things best for them.
Yeah, common problem about like
So are you trying to say you never get the managerial position?
no, it's not I won't get it though. By the time I'll get it, they'll be doing so making it. It won't affect them, and that extent your phone will also put the
You were in Vodafone was one of the worst networks. As soon as they sold it to the internet, they became good, like where they need to, because the person buying it has another name. He has the highest share, the largest share. If you change something and they name that, so that's you.
But sometimes what people change their name, like it gets their customers paid.
That is your personal ID that you personally don't change, even though they're with the highest share, you don't want to change.
No, you know.
So they are personal feeling pompous. I am family.
Really pompous. What's my answer? I
no.
That you could be I want to put your answer. Like
no,
so ordinary initials.
If you have to change this company's name to Apusi Answer, and you go somewhere and you introduce yourself, my name is Apusi Answer. When does everybody's mind go to?
What's the your hair like? Your baby?
What is it?
I don't like. Especially when the company has what everybody will be.
They just start down.
I won't personal with it.
You are the one who
just how it now. Like that's what
yeah. Or she is not having they cannot really by now people are looking for market education they have student and they have children and then how that they cannot find a way to face this.
Okay. So they are eating. I'm thinking the best opportunity for you guys to great. When it's getting to time, you see how to electric like so just contact for the so you can go down.
When you open the thing,
You're finished there. Give the results.
Oh, wait.
Because
We
one
gave
movie.
it to,
But you guys said it was close, eh?
Let it be open.
Nana, I kept it.
On your way, you're going home. We'll go.
They moved you.
We'll move on
Going
there.
baby.
By the same way. Okay, so when?
I don't know.
Oh, now, okay, they say there. Okay, they say issue.
Hey, nigga, tell me the market. Hey, I have lost touch.
Why do you want me to give poker?
About, I think he had you.
No. We can get someone else to do a poker. Let's get some of our guys offshore to come down and do it.
That's if they will. That's if they will.
Let's early engagement.
So they will plan.
Early engagement.
So that-
Set a date. Maybe second week in January.
Yeah, they are
rather
likely
than
to
end
be
of January.
they are
So
likely to be
second
around
week in
that.
January, and then we just
Now,
position it. Yeah.
The diaspora guys, they can't drop Christmas finish. Before they
Yeah.
will go.
No, I mean that's the key thing, right? Don't choose the topic. Just get a panel, and then let's think about it. Maybe I was thinking maybe rather than one long presentation, we do two short panels,
Okay.
depending on the topic areas. Okay, so one panel discussing global
And another
investment
panel
strategy,
that's local.
another panel doing local opportunities, private equity, stuff like that, all combined. Let's think about it. Between you and Theo and this thing, Charlie, just kill it quick. Yeah. 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 So the domestic market, right?
The panel.
Yeah.
Even if it's short.
Yeah. So there was one I saw where there was a presentation for like 5 minutes, and then others joined for a panel conversation around the same topic, or a presentation for like 10 minutes, and then a panel conversation continued on the same topic, and then the next panel you had a presentation, and then panel conversation continued afterwards. So I think we just need to think about how best we want to do it. Charlie, it's not easy. Oh. Yeah, and your content depends. Yeah. Yeah. That was what threw you off. And then the pause you said, wait for the question. Yeah. 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 But let's get a bigger venue. Let's get our sponsorships up and running. Yeah. And then we get more people to join us. We get even some of the university guys to join us as well. Yeah. 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 Yeah, that's what they used to market it. It depends on the numbers. It depends on the numbers because some of the other societies they separate the charter award ceremonies. Like Saudi, for example, announced their charter award ceremony, but they had like 100 people being given at the time. Yeah, because the numbers here. December. Yeah. Yeah. And then you have the forecast in Jan. Yes. Think about it. If we have to do it this year, we do it this year. Of course. Yeah. Yeah, of their bodies. Yeah, yeah. Exactly. Yeah. And even the outlook, I was thinking that what we should do is this, right? We write to a company, ask for sponsorship, and give them a table. Now they can invite their clients to come and join them at the table. So they have something branded. So maybe his company will bring their top clients to come to the event. Okay, and they sponsor their, so you pay for the sponsorship, you get a table, and you bring the clients on. Okay, that makes it more, but you do it early on. So you do it early on, and you get companies to this thing, right? Yeah, 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 yeah. But she's on the committee, so they should, if we instruct you to, they have to give her the guidance. Once you take the decision, she would follow. Okay. Hmm. Second oldest, Philadelphia. Good. Oh, honestly speaking, if we start early, we can get very good external speakers, and then we can have industry players from the central bank send invitations to those people to come and join and listen. If they don't have to speak, you understand? See how that goes. I remember in 2022 when I mentioned that IMF was likely. Was it 2022? I mentioned IMF was likely to happen, or 2021, 2022. But like, hey, you are calling IMF when the minister is saying they won't go to IMF. And do you know how it happened? It happened without him being present. The call was made to IMF, it wasn't around. That's how they got it done. No, because the call was triggered first. So once the call was triggered, he was forced to now go and do the negotiation. There's a lot that happens in this market. All the others are able to come. But you two is walking around. All the people they go thought they will go after, they are still walking around. You know, the truth is that the charges are waiting. What has been disclosed in the media is not what they are going to charge. You understand? And he knows what those charges are. So he knows his ability to navigate some of those will be challenging. So you would complain that you don't want to put your money in T-bills at 5%, right? You would complain. Okay, let's assume inflation is averaging 3. No, it's no longer 8. As for the target, it's not longer 8. I can't tell you what it is, but it's no longer 8. They are discussing. It has to go lower. They are discussing, but it's not. My inclination is it should go lower. So their strategy to achieve and maintain all that. Yeah. 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 It's food. Correct. On FX. So you should ask yourself, what is their strategy of food? I think we should. I was just thinking all of them. I think since all of them are.
Hello. Do we have all the teams here? Let me start from Clear Path. Are they here? Clear Path is here. We have a Mentalist, 360, Apex, Alpha, Atlas. I think we are all here, right? Mentalist, you are here. All right. Thank you very much for the activities of the day so far. And I think you can all attest to the fact that we've got some good stock pitches today, right? So if you've not held a stock before, at least we have one sell. So if you are holding and you want to sell, and the sell recommendation is what you properly align with, kindly sell. The same way, if you don't hold, or if you are not a holder yet and you want to buy, I can please as well buy. We want to take some messages from our sponsors, after which we would move on to some comments from the judges, their remarks. So if the sponsor comments or remarks are ready, please let's have them.
Dear future me, I hope you are living.
I know our contestants are all thinking in their heads, who is going to travel out of Ghana with the terms and conditions that are attached to that travel.
In the life you dreamed of.
Next time, use Liverpool. If it was Liverpool, by this time we are in cruise control.
Dear future me,
Once they prepare, I think we can go ahead and take the remarks from our judges, whilst the technical team put themselves together. So we'll start from Ernest.
Okay. Yes. So I'd like to start by saying a hefty congratulations to all the participants in today's or this year's competition. The standards have been really high. The depth of knowledge and research that you guys have displayed is quite impressive. And I just want to assure you that whether or not you win the competition, you are ahead of 99% of all tertiary institutions, not just in Ghana, but globally, just by taking part in this competition. You don't know how far this experience will take you. You know, I also would like to say that, I mean, generally, this is supposed to be a presentation, and it's supposed to sort of prepare you for the corporate world. In the corporate world, you do presentations, and in doing a presentation, you are trying to drum home certain messages. You're either trying to get somebody to buy into an idea, to hire you, or whatever it is. So as you present, don't be too focused on being like a rote machine, but try to present your points and then make sure that the key areas that the assignment seeks to highlight come out clearly for the judges to be able to properly assess you. And then it also helps you be able to sell yourself better, because generally in a presentation setting, you have very limited time to be able to carry your points across. Then as you work in a team, the body language and all of that should also communicate a lot of teamwork. I noticed that for some of the teams, when it's not someone's turn to present, you see that they are at the back, they are looking somewhere. you should all be focused on the audience as if you are the one presenting, and then you should be seen to be giving support to the person who is speaking at that particular time. But overall, kudos on the great job that you've done.
Okay, so for me, I think that was a very good presentation for all the teams that came. In terms of the PowerPoint, the slides that you presented, they were all on point, very good. And also, I think one thing that this particular presentation and challenge would give you is very good presentation skills, which you need in almost every field that you find yourself. So congrats, and then I'm really proud of all the teams that came. But what I would also say is that when you are presenting, you need to be relaxed and then give out the points that you want to give, and don't feel rushed, especially in the early presentation. What we realize is that most of you, the points came out when we're asking the questions. So when you are presenting, just be relaxed and then give us the points one-on-one. Also, when you are answering the questions, make sure that all the team members answer at least some of the questions so that they can, like, all the other people in the team can get involved. Yeah, so clearly that's the point that I would like to.
And I just want to say congratulations to you all. May the best team win.
May the best team win is actually a comforting word to everyone for not winning. Please, do we have the sponsor's message now? Please, let's go.
Dear future me, I hope you are living the life you dreamed of. Finally, running the business you've always wanted. Waking up each day with purpose and enjoying the freedom you worked hard for. I hope that your efforts over the years led to a life well earned. But dreams do not happen without action.
Your future self is counting on you. Fulfill your promise of a better tomorrow. Start saving with Access Pension Trust to achieve financial peace of mind. Visit www.accesspension.com/futureme to learn more. Access Pension Trust, your reliable partner in pensions.
Do we have that of Carl Asset? Stanley? All right, so we have some certificates to present to our participants. We would call some of the judges, in sequence, then we'll also go to some of our board members to help us with the presentation. So please, if you hear your name, you please come. Okay, so I think for this, let me call the president of the CFA Society for the faculty. I think this one is for the faculty, so let's put our hands together for CFA, who will do the presentations for the faculty. So the first person we have is Dr. Benjamin Amwa. Please see Dr. Benjamin is here. We have Dr. Philomena Aqua. We have Dr. Peterson Owusu Jr. We have Dr. Oscar Akupe. Okay, put it on. Dr. Godfrey Awa. Awa is not wrong. Sorry. Dr. Nana Kwesi Karikari. Sorry. Let's put our hands together for him. Dr. Anthony S.L. Anderson. He just went out. Okay. Thank you very much, Jojo. We'll now go to the various teams. Mr. N.S. Atiso, after asking all the questions, please do us the honor. Emmanuel Beni, right? Ishmael Al Husseini. Gabriel Konedu Amenin. Okay, so after Gabriel, we would bring Aaron. This is Gabriel Konedu Amenin. Let's welcome Aaron and then put our hands together for Anastasia. We have Anthony Kwesi Ejay. Is it Ejay or Ajay? Ejay. Felix Kwachi should be following, please. Let's put our hands together for Felix. Salma Mohammed Awal Appeal. Salma. We have Lorna Na Ayele Bros. After that, we would invite Dennis. Let's put our hands together for Dennis, our CFA Society Secretary, to do us the honors. He can decide that next year I will stand here. Tadi Joanna Shi Chamisa. I hope I got that right. In case I got it wrong, I'll buy you malt after the event to appease you. Let's put our hands together for him. Francis Aqua Apple. Francis Aqua Apple, followed by Raymond Apia. Raymond Apia. Oh, okay. Gift Quay. Gift Quay. I think that should be the last one for Andy. Let's invite Peter as well. Let's put our hands together for Peter. Moro Suleiman. Moro Suleiman. Let's put our hands together for Moro. Michelle Selikem Wanya. Well, Michelle. Well, I pronounce it in error. Johnson Pendoli, right? Maturo. My brother, forgive me. Zion Abiku Tani. Jesse Sesime Agbozo. We have Kwesi Apia. Okay, so maybe let's invite Nanawi. After Kwesi Apia, let's invite Nanawi Buama, CFA, to also do some others. I'm showing you all the big men so that you'll be inspired, right? Paul Awuni. Let's put our hands together for Paul. Excelsia Amankwa. Happiness Benisola Edom. Emmanuel Mensah. Justice Kwame Apia. After Justice, we would invite Mawan. Done.
No, there's.
Okay. So let's invite Mawan. Thank you very much, Nana. So we have Bill Gates, Eliklim Kuvo. Bill Gates, Eliklim Kuvo. I would expect that our Microsoft subscription should be free for 1 year after coming to enjoy our AC. All right, we have Felix Amate Lai. After Felix, we have Isaac Edu. Isaac Edu. And Gifty Kalipadu. All right. Thank you very much. Thank you. Let's put our hands together for them. All right. So we have one of our sponsors here who wanted to make a remark. She's from Carl Assets. If Anita is here, let's put our hands together for supporting us. I think all the research challenges we've had, Carl Assets has been behind us. Let's put our hands together properly for them. Let's make her.
Hello, everybody. Okay, so my name is Anita. I work with Calaset. I'm particularly excited to be here today. It's my first time joining you. I know that we've been sponsoring in the past years, and I'm really happy to be here. I've heard a lot of encouraging things, especially from the next crop of industry players. And it's really exciting to know that even from this level, you're building yourselves up to take up the tasks that are coming up within our ever evolving industry. So we're happy to welcome all of you. We look forward to a partnership that goes beyond the next few years. We trust that as we go, we can collaborate more on other things in other areas that can be of mutual benefit to all parties. And just to let you know that, given that we are all within a certain space, I hope that for a lot of the things that you are learning as participants of this competition, and then for the industry members and supporters, I hope that you are preparing towards retirement. Every time I have an opportunity to speak to people, is the first thing I say. I hope you are preparing for retirement. Retirement doesn't start when you're 50 plus. It actually starts now. And so if you haven't taken any steps to prepare towards that, we are happy to assist you at Carl Asset Management to put your life in order so that by the time you are retiring, you are not that uncle or auntie that everybody's avoiding at a family event, because by the time you've left there, you've hustled everybody out of a few hundreds of CDs. So yeah, thank you very much. We have one of our partners here. We do unit trust investments for individuals. So we have the Carl Benefit and the Carl Advantage Unit Trust. We're happy to walk you through any of our products any day. You can speak with me or to any of my colleagues. Joshua is there. I have a few other colleagues out at the back, Abeku, Cephas, and Richard. I hope that if you haven't started, we get to engage with you soon. But yeah, thank you. And congratulations to the participants. We are very proud of you. When I was in university, I didn't know that much. So I'm happy that you know so much. Congratulations. Thank you.
Hello. All right, so we are moving on to our award presentations. From our sponsor side, we have Peter over here. We would invite him to give the award for the second runner-up. So let's make Peter come first. Okay. So you will please read this out. Whilst, you announce the second runner for us, then they come forward and then pick their award as well.
Right. Thank you. So as all the previous speakers have said, all of you did really, really well. However, only few can proceed to the next stage. So it's my honor to present to you the second runner-up for the 2025-2026 CFA Institute Challenge, the 5th season here in Ghana. And the award goes to Team 360 Insights.
Please, for the pictures, you can please arrange yourselves roughly. So if the faculty is also there, please just join them at once. We are proud of you. I know the rest of you, your blood is pumping. We have a BP machine here. I can check for you. So once more, I would like to ask Anita to join us. Anita from Carl Assets, that's our second sponsor. So we'll invite her, as usual, you read out for us, and then you make the presentation to the first runner-up, sorry. Yep.
Okay, so our first runner-up of the 2025-2026 CFA Institute Research Challenge 5th season. Alpha Capital, representing Ashesi.
Let's put it together for them. At this point, I want to know who the first is. Well done, guys. I think if the faculty is here, please join them. If faculty is here, please join them. The good thing is that everyone got a certificate. There are no losers here, right? Everyone got a certificate. Go and prepare your LinkedIn post properly and then leave it there. Now, I would want to invite the president of the president, right? When it comes to professional association, CFA is the best CFA, right? We have two, CFA and the rest. And we are privileged to have a man that is well respected among our society and among our industry, in the person of Jojo Kakrabanaman, CFA. Jojo works with Stanchart. Let's put our hands together for him as he presents the winner for edition 5. For this particular one, all team members get our trophy, and the faculty also pick one on behalf of the school. So faculty is here.
Okay. So there's a team that's going to represent us in Egypt. So as champions, please do know that your job is not done yet. You have to go back and prepare. The winner of the 2025-2026 CFA Institute Research Challenge 5th season in Ghana is, drumroll, Sigma Capital Partners, representing us actually. Know that we have all the credit for winning. You need to share a few words. Please do come over. Let's take a picture. The mentor? No.
Yeah, I think they'll win Africa. They will win Sub-Saharan Africa. Well done.
Papa T.
Veteran faculty.
All right. I thought you were joking. All right. So we have been with this local competition since the beginning. The past 4 years, I think this is the 5th, right? Okay. So we won the first, we won the second, the third, the fourth, and the 5th. All right, so I would say that first, I mean, the foundation is there. We have courses in finance from second year to the final year. So, and our business administration program gives more finance courses than any business program I've seen in Ghana. Probably more than even those that are specializing in finance. So we do a lot of finance, so the foundation is there. And most of the students selected are students who have done some internships in a finance-related field. So they come to the competition with some industry knowledge as well. They have also taken some short courses online. So they've enhanced their knowledge beyond what we've done in class. And we make them present. So like yesterday, I called all of them that come and present to me live. I time you. So I will check the flow, how you are conversant with the figures, and we ask questions. So we give them real rehearsals. We don't just say, okay, just go and practice. They'll come and say, oh, we've been practicing. But probably they were sitting doing it. So sometimes they sit, if you are sitting and presenting, you are a bit more relaxed. You can see your screen. So we make them stand, present. You are not looking onto the screen, just to be conversant with the figures. So one, I said, we do a lot. So the concepts are there. They have industry practice. They've done some courses beyond what we've done in school. And the rehearsal is also very strict. So these are a few things I can say. But I think the time for them is a bit short. So maybe, Mr. President, you can also look at that. Like if the time is long, I think it will help Ghana also. Because what they've submitted, that's what is going through to the final. So probably we are not helping ourselves with that short period. Yeah. Yes. So if we can do things earlier and we start with all others, I think that will help. Okay. Thank you.
All right. So thank you, everyone. Let me just start by saying thank you to our sponsors. Carl, you've been very gracious host. We appreciate you. And we look forward to the partnership going forward. To Stanley, thank you so much for sponsoring. To Access as well, you've always been with us. We are very grateful. I also want to just say a big thank you and an applause to all the students. Please give them a round of applause. You've done a great, super job this year. Let me also thank the faculty. It's a lot of work preparing the students. And sometimes people don't appreciate it. But truly, you all deserve a round of applause as well, please, to the faculty. I would also want to say thank you to the industry mentors. You know, sometimes if you don't have that exposure from someone working within the industry, it's a lot difficult getting your act together. So I want to just say a big thank you to all those who supported the entire process as industry mentors as well. Those who helped with the boot camp in terms of training, and to the graders who helped in the grading process, and more importantly to our judges, who've been very gracious to be with us as well. Thank you all so much. As I said, for the first time, we're looking to send the winning team to a regional championship. And so if we are gracious administrator, would get in touch with you to make the necessary arrangements so we can get you to represent Ghana and to make us proud, because we would like to hear that you've taken the flag higher to the regional championships and you've been successful at it as well. So I'd like to say thank you to each and every one of you for making the time to join us today. To those who joined us online as well, just a big thank you to all of you. To all our sponsors, we will come knocking again next year. To our faculty, please take pride in what you're doing. It is a lot of work, but we appreciate you as well. And see you all next year. Thank you very much.
Please, I think we would all want to take a good picture. So all those are the extreme ends. Please, let's come into the middle rows. Yes, please. Okay, so the photographers, please do the arrangement for us. But our sponsors, judges, board members and faculty, at least you'll be seated. Then we have the participants all behind. So let's do it that way. So the judges, our CFA and faculty, you'll be in front.